All right. Now we can do this over again. I apologize, guys. I totally goofed. I definitely was not sharing my screen. And when this gets put on YouTube, everybody's gonna be like, D, you fool. Welcome to Forex Fridays. Dang, gotta start all over, man. I'm so sorry. Today we're gonna be talking about weekly range review. We're gonna be talking about the Asian session review this week. We're also going to be talking about trend identifications, turning points during kill zones. Thank God I have my phone next to me and had Telegram open. I should have checked the chat. That's on me. But we're going to be starting off with the DXY. Sheesh. And as always, I like to open my chart with the weekly open. And it's a good gauge to know whether if you're overbought or oversold in the marketplace. Now, when price is in a discount, it's ideal to buy. Now I might move a little faster because I know you guys heard this already, but it's ideal to buy down here. And when price is above in a premium, it's ideal to sell. That's just a general basis. Now that doesn't mean every week you're gonna always find great sells in the premium here, or you're always gonna find great buys in a discount. In a general rule of thumb, let's say you had no idea, right? Going into the trading day. Because normally there's three things. You're either gonna be neutral, meaning you're gonna sit on the sidelines, or you're gonna be a buyer, or you're gonna be a seller. If I had to tell you, or if I had to tell anybody that had no idea about trading and they were just starting off trading, if I had to go back 6 years ago and tell Deontay, hey, if you're going to be a buyer, you better be buying below discount, below this weekly opening price. Win or lose, this is your best bet. Same thing, vice versa. Deontay, if you're going to sell any time of that week, and it's going to be on a Tuesday, Wednesday, or Thursday, because these are the ideal trading days, it better be in a premium. And when should it happen? It should happen during the kill zones, Deontay. It should happen either in London or it should happen either in New York. If you're not available for London, you better be available for New York. And if you're not available for neither, then you're going to have to be available for Asian session, or you're going to have to be a swing trader or some type of scalper because you got to make sacrifices to be ordered to trade. So generally, looking at this market with hindsight data, we could see that the buy scenarios are unfolding at a discount in general. Just looking at it from a hindsight perspective, you're going to be buying cheap. And we can see multiple times the market makers or whoever controls this market, because everybody says, no, they don't control the market. It's not the commercial speculators or it's not the central banks. Whoever you believe to be controlling this price action to go up and down, they are buying cheap because it's reflected in the price action here. We can see it. It's pretty obvious. And then vice versa. Whoever's controlling this market, they're selling in a premium. Now that's exactly what you need to do as well. It's just common sense. Now when we go down to Wednesday, we're going to look at these examples here that we have annotated. Now it's going to be mainly A and D recognition here. So accumulation, manipulation, distribution. And we're seeing how often that this pattern sets up. So now I know if most people are versed with ICT knowledge, they know this pattern, but it's always good for those that maybe may not know, or just a great refresher to get some tips to sharpen on your skills. We could see overall for the day going into Wednesday, where is price? Price is above in a premium. See, this is why I wish the chat icon was like floating somewhere on my screen so I can also, I'm just not a technical guy. I wish I could see the chat. That would have been solved. I feel so bad, man. All in all, you can see how price is above Sunday's opening price. You want to be looking to look for sales. Now, like let's say you go into this market and you have no idea whether you should be a buyer or seller, but you go into this market and you see that price is above Sunday's opening price. And you notice as well price is above midnight opening price going into London. So you got that double confluence here. Let's make that thicker so you guys can see it. There. Price runs up and then it goes down. That's that Judas swing on the retail traders. That's the accumulation that's occurring from 8 p.m. to 12 a.m. Typically, the DXY will 9 times out of 10 consolidate here. unless there's something going on with late news or PMI or in interest rate decisions for like the yen, the Bank of Japan, then we'll probably see strong moves during Asia session for DXY. Like UCAD, Swissy, they hardly really move during the Asian session. There are definite opportunities to make money, but it's less likely and not as great to find a setup. I would prefer people to trade yen crosses during the Asian session. The Asian session and my ideology is the starting point of how the IPTA true-day range is going to play out. So the Asian session high and Asian session low is your closest source of liquidity going into the next intraday trade or the intraday day. So you can see how it takes out the Asian session high here, raids the high, and then it comes down and raids the low. So we're going from what? Buy side to sell side. The market is only going to be looking for liquidity. And liquidity comes in forms of equal highs or swing highs or equal lows or swing lows. And that's what the market is going to do. It's going to rate it, and then it's going to create either a swing high or a swing low and then change course. That's what it's going to do. But notice how it's above midnight opening price, 12 a.m. right here. We'll draw it all the way out here. MOP. It's the same thing with SOP. Price is above premium. Double confluence because this is Sunday's opening price here. Let's get that on the chart. That's Sunday's opening price as well. So you got that double confluence. We can see how the market is pulling itself to be overbought. You don't need an indicator to tell you these levels. Believe it or not, you don't. The price action is going to tell you naturally by its open. It moves above the open. It lures the retail traders to do what? Break retests potentially. Break the Asian session high, which is here. Come back, retest. Retail traders may think it's going to go long. They can be right, but most times they are wrong. And then price continues to sell off, taking out the Asian session low. And we can see the New York session gives that retracement, and then it sells off again, going to London close right there. So London close, it's a funny session in my opinion. I don't like to trade it. I used to trade it earlier in my career. I don't trade it anymore. London close is pretty funny for me, at least. I think it's very unpredictable at times, but it has two characteristics. And London close is from 10 a.m. to 12 p.m. So that's that last kill zone that you have. So if you don't get a trade here or here, you have 10 a.m. to 12 p.m. to potentially find a scalp opportunity because it's not going to be something major most times. But the two characteristics that I noticed that London close gives, as we know, it's either going to be a reversal to the intraday movement or it's going to be a continuation pattern. Now, the fact that you could get those two characteristics, I don't like it because they go against each other. You're either going to get that continuation or you're going to get a reversal. And I find it difficult to try and predict that. I don't want to have any dabble in London close or even London session. But looking at it, we could see general hindsight, very broad overview. Where should you be selling? Premium. That's all I really want to get through to a lot of traders. You need to be selling in a premium. Why is my entries not the best when it comes to selling? Because you're selling too low. That's it. You're selling at a discount. Everybody's selling below midnight opening price. Everybody is selling below Sunday's opening price. It's irrational. Now, there are times where you will have to be forced to do that. But when you do get the opportunity and the chance to sell at a higher price, you take that ticket and you sell it because you believe it's going to be less valuable within the next couple of hours, the next 6 hours of the day. You think it's going to be less valuable if I get a short position somewhere around here at this high point here around this line. I could be profitable in that sell. Now, the same idea can be said vice versa, but in general, it is ideal to sell above. I can't even draw with this above it or close to this line. Notice that it's either good to sell. It's very great to sell above this line or sell close to this line. And I know you're going to be asking about entries and stop loss and risk management. We'll get into some specifics when we look at the New York session. but that is your classic AMD. It took a little longer to unfold. Normally, you would want the New York session to distribute lower instead of give tracement, but you can see how it hits Sunday's opening price. Look how it smacks it, and then it just starts accumulating around it again, accumulating multiple times. It hits it multiple times, and it runs up. It gets expensive and then sells down. That's not by coincidence. These are things that indicators can't tell you. This is why I try to tell traders leave the indicators alone. It's only going to be detrimental to your development as a trader. The indicators see what I'm trying to show you here. The moving averages, the RSI crossover, all those other indicators, Ikomoku cloud, all that stuff is garbage. It's garbage. So when I see it on a trader's chart, I kind of shrug my head and I'm just like, hey, so be it, you know? Same thing. Notice the hindsight that we have here. It's an up day. It doesn't finish really strong and it has a high close. It does come down a little lower. Let's play it out just to show what it looks like. There we go. But look at the double confluence again. So take this, put it over here, and we'll take, nope, we drew it out here on this MOP. Look at the double confluence that it gives you for the day. Multiple times. Where is it buying again, guys? Discount, right? Look at the recognition there. When should you be buying? Discount. Now, everybody's gonna say, but how would I have known to be buying there, Deontay? That's not up to me to tell you. That's up for you to speculate, get your technical and fundamental analysis down right. And if you're gonna go into this day being a buyer, and we show that time and time again with daily recognition, and we'll talk about that. We have a great example with gold to show you how to find daily recognition and daily draw. But once you figure out the draw, you head into this day saying, yo, I'm a buyer or I'm a seller. Or you have no idea. And I voiced this publicly. I would tell you guys in the daily tracking that I post on YouTube, I would say, hey, I really don't know what's going on. I need more data. I'm not looking for a trade. And then you'll see a week, maybe a day or two pass by, and I finally get a little more information. I'm like, okay, I'm starting to lean a lot more bullish now. And then once things hit to my liking, I'm going to say, hey, I'm going to look to buy after today. I'm going to look to sell after today. But that comes down to understanding the trend. It's very crucial. Overall, same thing, accumulation, manipulation, distribution. Although the New York session here, because of that news event that we have, right, the inflation rate, New York session comes and raids the low that's formed here, and it forms at 130. But just giving an overview look, just look at how it's moving. That can't be by coincidence, guys. Why is it buying down here below midnight? And then why is it getting above Sunday's opening price? And look at how it reacts around that price line. Look at how it hits it, it runs away. It even rebalances the inefficiency here a little bit. Some people may argue that, which is true. But look at how it's close to Sunday's opening price. That candle open. And then it shoots up high again. And if we look at it from this perspective, let's take this off. It takes out Wednesday's low. Thursday takes out Wednesday's low and then reverts right back to Wednesday's high. So it takes out the low and the high in one day. Purge. There it is. Purge. Revert. Buy, sell side to buy side. Nothing changes. Market is all fractal. You're seeing it happening during the kill zones. You're seeing it happen with the daily candles itself. You're seeing it happen with the monthly candle. You're seeing it happen with the weekly candles. It's purging and reverting, purging and reverting. And then it starts to trend. And that's where we want to be. We want to be in that spot where the market's trending. So we have more odds in our favor to be like, okay, we could be the buyer for the next 2 weeks. We could be a buyer for the next week or so. And that's the end of the week there. But just look at it. Sunday opening price sells above in a premium, drops back down, gets below Sunday's opening price, rallies back up, threads the needle again, right? Threads the line in the sand, drops down, comes back up, This is late going into Friday. You shouldn't be trading late. The last couple of hours of Friday, you definitely should be looking. You shouldn't be looking for a trade. But if you turn on the sessions indicators again, that's midnight opening price, double confluence. Price is below midnight opening price and Sunday's opening price. Look at how it buys. It's cheap twice. And then you can even say it's cheap a third time. Why would I say that? Because we got the opening price for London session. 2 a.m. open. Price drops below 2 a.m. open. And then it rallies. It makes the low of the day before New York comes and raids it again. And then it runs back up. So all in all, that's your weekly range review for the DXY. So we're going to move on to UCAD. I'm going to delete all that. So we had a couple of news events this week. Red folders. So I had someone ask me a question. What do you do on days where there's news? You're either in the trade before the news drops or you're not in it. Simple. And if you're not in it, do not wait for the news event to drop and then jump into price and start to chase it. You're playing Russian roulette at that point. Don't do it. Just wait for the news event to pass. Let all the storm pass. Let it clear. Look to see what you have left. And is there a trading opportunity for you to find a setup? And where are you relative to Sunday's opening price, midnight opening price, and where are you on the day of the week? Is it Tuesday, Wednesday, or Thursday? So that's how I would look at it. So looking at this here, Tuesday, just look at the day. Where is it buying again? Cheap. Drops below Sunday's opening price and then it rallies up. News event occurs here. Back trade. I don't care about the data. The numbers don't mean nothing to me. I don't ever look at the numbers unless it's interest rate decisions, whether the banks increase their rates or lower their rates. I take that into consideration because higher rates mean higher yields and more investors. Lower rates mean less lower yields and less investors. So I really take that into account. I don't look at job numbers. I don't look at CPI numbers. I don't look at NFP, non-farm payroll number. I don't look at those things. The news event's going to come out. It's going to come out. Let it do its thing. And that's it. Cheap goes up. So that's Tuesday. Notice how they leave. Just a little side mark. Notice how they leave this Asian session low open for the new day. They leave it open. You also have that double confluence or even triple confluence for the London and even New York. Look how price respectively drops below the opening price for midnight opening price here. Drops below 2 a.m.'s opening price here. Drops below 7 a.m.'s opening price here and rallies high. So multiple opportunities to buy at a discount. Not a classic AMD accumulation, raid the session high, and then manipulate traders to go long and then go short. It doesn't happen. They leave the Asian session low open here. Going into the next day. Look at where we are relative to Sunday's opening price. Look at what London session does, and we're above the weekly open. Sold off. I don't know how many times I gotta say it, but you should be selling in a premium. I'm gonna say it till everybody else understands what I'm trying to tell them, because people wonder why their entries are just getting stopped out or why they're not getting the best entry possible so that they can adhere risk, or have better risk management, because they're selling down here in a discount. Imagine selling down here and then price pulls back up. It's annoying, right? Because it's going to probably eat into your profit or stop you out. But when you sell above the midnight opening price and you sell above Sunday's opening price, you can adhere a lot more risk. The hurdle for price to get to you is probably less likely. It can still happen, but it's less likely that price action will come back to knock you out, unless there's really some type of news event that's going to come and stir the market up both ways to really wipe out both buyers and sellers. But you see, if you were to get your sell anywhere up here, or even remotely close to the line, like let's just say 12 a.m. came out and you just don't got time to trade today, right? For some reason, you got to walk the dog, you got to talk to your girl, whatever it is, you got to do something, right? You just can't trade for the day. You're too busy. You got to go to work, whatever. And you speculated that today was going to be a down day. What would you do? And you didn't have time to trade intraday at midnight. You set an alarm, you wake up, and you sell right there. You sell there. Wherever the Asian session high is, I would add 10 pips to that. 10 to 15 pips to that Asian session high. Wherever it is, I would add 10 to 15 pips to that. And that would be my stop loss for the day. And then I would look hold to the end of the day and see if I would come into profit, or I would check in the middle of the day or whenever I'm free to see if I'm into profit at some point in time. Because if we're just looking at it generally, look at how price is literally holding itself around midnight opening price. And on average, ICT would say this a lot. I remember I was going through the mentorship, and I would always be confused about how he would say sell around or buy around midnight opening price. And I'd be like, but that's like so broad. But then later on in my career, I started to see, I was like, oh, it's broad, but it's so simple and it's still effective. It may not be the best entry ever, and you may have to adhere a lot more drawdown, and you may have to risk a lot less, and it's not as sexy, because everybody says, oh, you didn't make 2,000 pips, or you didn't make 5 bands on that trade, or you didn't make $10,000 in one trade. Great. I'm not here for one night shots in one day. I'm trying to be the tortoise. It's a slow journey to wealth. I'm not trying to be rich overnight. You could be rich overnight and you could be broke tomorrow, homeless tomorrow. That stuff is irrational. So we take our time with it. If we just sell anywhere near this line for the day, look at that. If we were to just sell anywhere near this line for the day and hold till the close, to hold all the way to midnight, or hold going into Asian session, we could see that you would potentially, I'm not saying guaranteeing any profit, potentially getting profit theoretically with this idea. Let's go into the next day. I already wasted enough of your time, guys. So I want to definitely get into the next topic. Stop. Wow. Look at the day. It's hindsight. Everybody will sit here and laugh. Ha ha, key. It's hindsight. You don't know what you're talking about. But how else are you going to learn? You need to go back. It exposes you to gain experience. You need exposure to gain experience. Look at Sunday's opening price, guys. Isn't that coincidental once again? Why is it doing that? Why are the candles just playing around here? And then at one point in time, it shoots away from it very fast because they were accumulating orders. They were buying cheap. Comes back down. Another chance to go long. There you go. It's gone. And it happens just before the news event, right? It's cheap. Just before the news event. Inflation data comes out, gone. You're missing that. Unless you're in the move already and you've already predicted that price is going to go higher, you're missing that. You would have to wait after the storm has cleared to see if it's a possible opportunity for you to get in the market again. You can see what happens. Creates that fair value gap. Very classic idea. Purple is crazy. Purple's hella crazy. Fair value gap, that breaks what? Swing highs. Multiple swing highs. Multiple swing highs. Price comes into the fair value gap, go long. That's my favorite entry technique. My favorite. My very favorite. Now I know there's other PD arrays here, but that's my very favorite way to get into the market. This is all you see me post on Asian Session Library. Look at every single one. It's the same entry technique. It hasn't changed. And it hasn't really missed for me either. It hasn't. And overall, buy cheap. Look at it. Look at where it's buying. Wow. Nobody looks at it this way. Everybody's looking at the indicator. Why? I don't know. And then just play this out. Look at how it threads the line. Look at how it threads the line. Ooh, that's a nasty day, honestly. I don't trade Fridays. I don't trade Mondays and I don't trade Fridays. But look at how it threads the line. It gives you that retail W pattern, right there. But look, cheap again, and then it runs higher. That's just how it goes. That's the market for you. So we're going to move on to the next topic because I wasted your time. I wanted to go through EU, GU, and stuff like that, but the same ideas that I'm showing you here would be inverse on EU and GU, since overall UCAD and dollar was bullish this week. The other pairs were definitely bearish. I don't have to look at them to know that. So we're going to look at the weekly Asian session review, and I'm going to jump right into this. So this week we had a couple of successful trades. This is on YouTube already, guys. It's in the playlist, Asian Session Library. The reason I'm doing this playlist is to prove to everybody in the trading community that you can trade Asian Session and that you can be profitable and you can formulate a model that's very simplistic and you can gain more than like 3%, 2% on an account in 1 week if you're risking properly. But let's jump right into it. Time is money. Time is money, my friends. We don't need this. Cool. Like I said, I can't see the chat. I got to figure out a way to have the chat on the screen that I'm sharing so I could like check the questions real quick and be like, oh, let me answer that real quick. And if I would have had the chat here, I would have known that I foolishly wasn't sharing my screen for, 20 minutes? Sheesh. Asian session model is simply looking for a turtle swoop. It is like my favorite thing to find in the market. Now, like we said, there's 4 phases of the market. As you learn how to trade, you probably come across the basics and you know that there's 4 phases: consolidation, expansion, reversal, and retracement. And all markets start in consolidation. And it's funny to say that the New York lunch session is a phase of consolidation. And after getting consolidation, you're either going to get a expansion, and that expansion could potentially what? Return back into a reversal. So let's take a look at this. So we're marking off the 15-minute swing highs that we have available that is unbroken. That's buy side liquidity here, right there. And then we got sell side liquidity. And sell side liquidity is going to either be the lowest low or the swing low for the session. Same thing vice versa. If you don't have a swing higher, whatever your highest high is, once 8 p.m. candles finish forming, right? 8 p.m. candles finish forming, or 8:15, because technically we're on a 15-minute time frame. Whatever that candle is that finishes on 8:15, that's going to be your high. You're going to mark it off and draw it out. And that's what you're going to have available to yourself as the trader. Now, going into this session, we like to mark off the opening price. I know I was just talking and mouthing about the opening price, buying in a premium, buying in a premium, buying in a discount, selling in a premium. Same thing applies to all the sessions. Fractal, 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 fractal. Doesn't change. It's all fractal. That's 8 p.m. open right there. 8 p.m. New York Eastern Standard Time to midnight, 12 a.m. I get questions about it all the time. What time is Asian session? Quick Google search will get you that answer. It's all over the internet. Price trades, opens, it trades down. At this point, what does Deontay physically do? I'm literally going to go on the 1 minute time frame. 1 minute time frame. and I'm going to look for a fair value gap that breaks a swing high. And let's play it through to see if we get any. Let's bring it down. Nothing, nothing yet. Nothing, 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 nothing. Pause. See this right here? What's this? Fair value gap here. Swing high, broken. Swing high, broken. So we got multiple swing highs broken. What am I going to do there? I'm going to look to go long at the top of that fair value gap. That's that premium side of the fair value gap. Now, why am I going to go long there and not at the mean threshold, right? Or the bottom of that fair value gap? Because I'm not quite sure if I'm going to potentially get if I'm going to potentially get an entry at that lower point there. That's why I want to take the first entry possible to myself. And I just realized something. I thought I didn't get any entry on Monday because I have this all on the Excel sheet. I've been tracking this, but Monday did give an entry. I didn't even realize it. Let's see if it does hit it and play it forward. And it does. And I'll be going long here. It would be a 1-to-1. That's about right. And it would look like that. Just like that. So there was an entry on Monday. I slipped up and missed it myself. Not perfect. And I think it will ultimately get stopped. I think it runs lower. And that's the end of Asian session. Oh, it was successful. Wow. Ha! Yo, this model don't miss. Yo, it's crazy. It's crazy. This model's too good. Literally, this is gold. It's gold. It's just I love it. I'm so glad that I was able to discover this. Not to say I'm the first, but I'm just so glad I'm able to put it out and show you guys something. I had marked it on my chart incorrectly. So I thought that this was not successful. I thought there was no entry. So I guess I didn't take my time looking back at Monday, but it was a feasible setup and it gave 15 pips. Wow. So technically we're at the Asian session episode 20, what, 23 now? 24? Wow. So I'm gonna have to go back and make a video on this just to make sure I have it in on the playlist. But there goes the model. Bang, 15 pips. Now, I think 5 to 10 pips is a scalp. I'm assuming 15 too because it's no different. So technically it's still a scalp setup. But at times when you get this entry, the market can continue trending in that same direction. So you can see, look, it trades all the way back up to what? That buy side liquidity. And then right at that point, so coincidental, right? It can't be random. It can't be random. It's got to be methodical and very specific. Why does it wait to get to this 15-minute swing high to then give a reaction like this? That's so strange. Now, that's not to say it couldn't just continue going higher because it could have, but instead it gave us a reaction down. But the fact that it gave us the reaction here is so odd. It's like, wow, this market is coded and rigged. It's rigged. It's literally rigged. The market is rigged. And we go back to the 1 minute just to look at where we got our entry. Wow. The results of the Asian session model this month has been extraordinary. Extraordinary, guys. This is just my happiness just shining through naturally to you guys. Extraordinary results with this model. That's over. Whew, let's just get an average. Something right here. Man, it's 60 plus pips. 40 plus pips. That's great. Now, it's not always going to be the full 60 because it's unrealized gains. right? If you had to be logical and realistic here, if you have a trailing stop, there are going to be probably moments in time where the market does retrace and stop you out, and then it probably continues going up. So sometimes not moving your stop loss is beneficial because you can get the full gains, right? Or the full realized gains that you could potentially have, which is a great thing. But then there's times where when you don't move that stop loss and you do, let's say you don't have a TP, right? TP is not in, but you have a stop loss in and you're trying to manually close the trade in profit, and you don't, you get distracted and you don't close out and price turns back around, you're in profit the whole time. And then it stops you. Ooh, that sucks. So you got to pay the trader. You can't get greedy at times. And if you can get away with it and you catch an extra lick and you catch more pips, you go ahead and do that, with your trailing stop. But do know trailing stops will get rated at points in time. It's inevitable sometimes. Sometimes some people are very lucky, and where they place their stop loss, they never get stopped. They happen to have a good intuition on where to place their stop loss. And most times when you're doing a buy setup, where are you placing your stop loss? Below clean lows or swing lows? Because they're all taught the same thing. It just makes sense. You want to put it where it's going to not continue to cause damage or eat into profits or take away profits from you. Because if it breaks the swing low, you might say to yourself, oh, if it breaks the swing low, then it probably can continue going in that direction with quote unquote bearish momentum. Because that's what I like to classify swing lows as. Swing lows being broken can be classified as bearish momentum. Vice versa, swing highs being broken can be classified as bullish momentum. I don't need an indicator to tell me bullish or bearish momentum. The market tells you everything that you need to know. You're not going to get it perfectly right, and nor is those indicators as well. But wow, what a Monday! This week was packed, man. This week was really packed with gems. I'm not gonna lie. Let's play this out. This week was packed city, and bingo, run it back right here. And like I said, it don't matter about who sees it, who doesn't see it. If you know, you know. And if you know, you better be utilizing this model. I just don't see an excuse to why you can't use the model. A child can use it. Someone with no Forex experience can use it. I was teaching my girlfriend this model the other day, and she was able to look at it and find it herself. It's possible. It's a very simple approach. Swing lows, swing highs, swing lows, swing highs. That's all we're looking at. Let's get this properly done. Mm, there we go. Love this model. Play it forward once here. I'm gonna put the swing low here, so we wouldn't take that one. Because like I said, if it's gonna make a high at 8:15, that's gonna be the high that you're gonna be using. You're not gonna be looking and using anything else. You're gonna be looking at that. And I think this here is just how we're gonna do it. Trades up, runs it, runs that 15-minute swing high. Notice as well, look at the time period. What's happening? Carnage. That's what's happening. Good luck trying to find trades in here. Scalpers are going to be looking for 5 pips here, 10 pips here. Possible, but most people is getting chewed alive in this. They're getting chewed alive every time. Retail traders are giving their money up every time in here. I don't care what anybody tells me. I want to see you find trades in here every day. I want to see someone. I don't know who it is. It doesn't have to be you, but anybody that's watching this video when it gets published on YouTube, if you can show me a model between 12 p.m. to 8 p.m. every day consistently and be profitable, we'll see. Price comes up here, runs that 1 minute time frame. What are we looking for? Fair value gap to the downside. That breaks a swing low. We got one right here. Quick. Here. Here. Did I mark it up right? No, I didn't. That is not it. That is not it. You can see there is no swing low that runs through that fair value gap. Sorry, no fair value gap that runs through that swing low. Still waiting. Still waiting. So it's all waiting because people see the fair value gaps and they're jumping. The antsy. The antsy. I don't know what's. I just sometimes I don't. I truly wonder what goes through some people's minds, and I know it's a lot going on when trading, especially when you're trading with live funds, especially when you're trading with a funded account, especially when you're trading trying to pass a challenge or whatever it is that you're trying to do, or even if you're an account manager, you're managing someone else's account. There we go. So that's the classic there. Here, fair value gap. There you go. Done. Entry. Done. Now we would look to go short, and I believe this is the day we got stopped out. Posted it on the channel. I'm not even gonna mark it up. I know that I think Tuesday is when we got stopped. Yeah, we got stopped. That was definitely 15 pips to the upside. It stopped us. So we take a loser on this day. But guess what? This loser is only 15 pips. It's not like we lost 50 pips. It's not like we lost 100 pips. Think about what happened on Monday. We only risked 15 pips. And for this trade, what could you be risking? 1%? That's a 1% gain based off of 15 pips on the lot size that you placed in. 1% gain during Asian session. And then we could even see it trends on even further for unrealized gains. So you have that opportunity of, instead of it being a 1-to-1, a 2-to-1, a 3-to-1, a 4-to-1, a 5-to-1, a 6-to-1, a 10-to-1. You ain't going to get it all, of course. That's just being very greedy. And you'll have to be very lucky. And at times you will be lucky and you'll catch those big runs. But pay yourself. And we get stopped out there. So we take a loser. So that's only 15 pips lost out of here. But imagine we only had we take out 15 here and we lose 15 here. So let's say we're at break even basically. We didn't win anything. So we went up 1%. We closed here on TP, 1% gain here. Right? We got that 1% gain. And then here we lost that 1% here. So we're at zero. There's nothing for the week basically, which is fine. Which is fine. That's not a problem. I think people don't understand that if you're risking properly, it's okay. Especially if you're at break even for the week and you're still up in your account. You can still risk the same amount. It's when you start getting into a deficit when you have to start lowering your risks. You can't be trading in a deficit and trying to mitigate risking the same amount. You can't be risking 2% and you're already 4% down in equity. Just irrational. You need to lower your risk. If you're risking 2%, you take that 2% risk and you lose it, you need to now risk 50% less or even less than that until you make back up the 2%. Then you can go move forward putting on the 2% risk on every single trade. Look at that consolidation. Man, like it's eating traders alive, bro. These accounts are getting smoked here, bro. The little scalpers, okay, if you're skilled. But the average person is not that skilled. I just know. They're just not. And I'm not saying I'm any better than them, but I'm just saying I just know to not even put myself in a trap like this. You shouldn't be trading. No trading permitted. All caps. All caps, dog. You shouldn't be trading here. Why are you trading here? Stop doing it to yourself. You're being greedy. Got other days. Once again, what's the model doing? Taking those swing points. 15-minute. That's all we're doing. Now, why the 15-minute time frame? Not sure how I arrived to the 15-minute time frame, to be honest. I just was studying it for a while, and then I arrived at the 15-minute time frame was just the best lower time frame to find the liquidity pools. Not the 5-minute, but the 15-minute time frame. I happened to come across that last year, and ever since then, I was like, this is a part of the model. It's got to be 15-minute time frame, always. Always, always, always. And that's it. Yep. Those are your liquidity pools. That's how simple it is to mark this model up. That's step one. There's only 3 steps to this model. Step 1, mark up your 15-minute swing highs and swing lows you have available going into the Asian session. That's checked off. Step 1. Step 2, wait for one side to be broken. Do not be a retail trader and rush into the Asian session, because who starts the market? This is a big tip. Such a small thing, but it's a big tip. Who starts the trading session? Retail traders. They're running right in through the gate. 8 p.m. 8 p.m. comes out. Oh, they're in. I need a trade right now. They're in. What are they doing? They're probably going short. Yes, there might be some people going long, and they might be getting burned on these shorts here. But the people are going in short. Oh, they're like, yes, we're making money, man. We're making money. We're good. We're good. And then we're like, okay, cool. You want to be a seller? Well, I'm gonna be the counterparty. You can see the entry right there. Like I said, this is all on YouTube already. I'm just going over it for those that haven't watched the video. Fair value gap, I could already tell. Right? That was the fair value gap. That's the swing high. So we're just waiting for price to run through a swing high. So we're just stalking it. We're literally like a lion stalking the gazelle. Right? We're just like a panther stalking the gazelle. We're waiting. We're just waiting for something to run through that swing high with speed. That's all we're doing. That's step two. This is step two. 1 minute time frame, one minute fair value gap. Now, before, I used to be taking the first fair value gap that forms after the break. That was a question somebody had. Which fair value gap are you taking? And are you waiting for all 15-minute swing highs and swing lows to be broken? No. Let's say there was another level. Let's say there was another level of a 15-minute swing low here. And this should be blue. Let's say there was a level down here. That's a 15-minute swing low. If it's not broken, it's okay, because I'm waiting for it to form after breaking either one. So let's just say, let's bring it back. I don't want to confuse you guys. Delete. That's that 15-minute swing low. Let's just say hypothetically there's another one down here. If the fair value gap forms here after breaking that first one, that I'm taking the trade. I don't have to wait for this one to break. I'm telling you, if you watch the series, I've given you all the answers already. If you go back and watch episode 1 and go all the way to episode 20, whatever we're at right now, all the examples are literally the same. It's insane when you see this. No one else is putting out a consistent model like this day to day, day in, day out, day in, day out, day in, day out. Everybody can talk about it and post in the chats how much profit they're making, not showing the consistent models to how they make that profitability. These people have poor risk management, risk too much, and they're making a lot of money in one day and then going into the Telegram channels and bragging. Oh my gosh, look how much money I made, guys. Nobody cares how much money you made. At least my point of view, right? That's my belief. Nobody cares. Teach these people how to trade, bro. Stop showing people profits. Everybody wants to be glorified and famous. I don't want to be famous doing this. I'm not gonna cuss. I could give a about it. You know what I mean? I don't care about the subscribers. I don't care about how many. I know the model. If anything, I didn't have to tell anybody. You know what I mean? I didn't have to. I could have been like, oh snap, this is a model that's going crazy. Let me back test it. Let me track it for a year. Let me see how this works. Let me see how it performs month to month. What pair works the best with the model, and kept it to myself. But that's just not me. I want to give back because I've been scammed. I've been scammed too. Buying courses, buying signals in the first 2-3 years of my training career in college, not knowing what I was doing. I've been there too, guys. I've been there. I've been in IML. I've been across that whole affiliate program, pyramid scheme program. I've been there before. Luckily, I got my refund, and somebody told me to get out, and somebody told me to jump into baby pips and learn it for myself. And that's when I started to learn price structure on the very basics, you know. And I still didn't jump into indicators even then. And then I happened to come across ICT, and I was like, oh crap, let me look into this. This is very interesting. And then so on and so forth. And now I'm the trader I am today. But the only reason I do this is because I was fed up with other people in the industry. Everybody wants to be famous on Twitter. I'm not trying to be famous, bro. I'm trying to pay my mom bills. I'm trying to pay my little bro bills. I'm trying to pay my girl's bills. I'm trying to pay my pop's bills. I'm trying to pay my bills, bro. I don't care about the fame. I'm gonna live and die. Sh- Life is short, bro. Most people don't live to 100. I'm trying to tell people, bro. I know this is not trading related. Deontay, go talk about trading. Talk about this. We don't care. But it's more important than trading because people have changed the way this industry has been formed. People have become very toxic in the community. The last 6 years, I watched the community go to shite. Excuse my language. I watched it go to shite. I watch people post things on Instagram and Twitter just for glorification, for likes, bro, to get to get that dopamine response. Oh my gosh, he liked my post. Oh my gosh, he shared my post. I'm really not worried about who likes my stuff, who figures it out, who comes across it. I genuinely want you guys to win without you paying me. I don't want you to pay me. I don't want to pay nothing. I want y'all to get in and kill this market. Kill it. Now, if the market were to come down here and still not give me the fair value gap entry that I'm looking for, it's okay because it's still going. I'm just waiting for the entry, no matter what 15-minute swing low is broken. So if it breaks both of them and then it forms, then I'm taking it. But if it only breaks one and it forms up here, I'm taking that. And like I said, the Asian session model series shows it does break multiple ones. I still wait for that fair value gap to form, and it forms. And I take the shot, and it's all probabilities. It's just me rolling the dice. I don't know if it's going to be right, but data, see, that's the thing. With the data, you start to realize things. You start to realize Tuesdays and Thursdays tend to be ideal. And of course, you're going to have unicorn days. And let me not get over my head. I still haven't tracked this model for a full 12 months. This is the first year I'm going to be able to track the model for a full 12 months. Then I could go back and bring to the community the information I found. And I could be like, yo, January, October, March, April, those are the best months to use the model. December sucks, September sucks, April sucks. I can do that now because I have the data and I have to go through the trials and tribulations. So it takes a couple years sometimes to really figure out how to niche in a model and to get it to optimal results. It may produce me results that are good, but I want it to be better. I know there's better. I can be better. My trading psychology can be better. My risk management can be better. My pyramiding can be better. Correction. How I stack positions longer. I could get better at certain things to make the model better. So, and we can see, boom, there it is. Price trades down into it. Press play. I'm not gonna draw the 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 1-to-1 ratio out. We're just gonna observe it. I think you guys are intelligent enough to comprehend. Little to no drawdown, 15 pips, bagged, gone, done, done. This is let's see, little to no drawdown too. Yeah, got like 20 pips. Hmm. Nice, and that's it. You're done for the day. That's 1% back. Like I said, let's say we're up now 1% on the account. Congrats, congrats. Because before, what were we? We were break even. We were break even. We gained 1%. We lost 1%. Now we're back up 1%. See, we're taking it slow and steady. Slow and steady. Now you could be very more aggressive with your risk. You could be risking 2%, right? You could be up 2% on Monday and then down 2% on Tuesday, break even again. And now you could be up 2% here on Wednesday. So it all depends on your risk parameters and how aggressive you want to be on the market. Let's move on to the next day. So I don't support scammers. Don't. Don't support scammers and I don't support liars. Just you got to live by that. You're a man of code. You're a man of ethics. You don't support people that lie. You don't support people that scam. You do the right thing. You do the right thing when you're back, when everyone's back is turned. You do the right thing. You're not out here doing the bad thing. I learned that life lesson from my coach and my dad. Don't do anything wrong, even when people aren't looking. Always do the right thing when people aren't looking. You better be doing the right thing when nobody's looking. You better. Because that's where it counts. Everybody likes to do it right when everybody likes to be right when everybody else is watching them. But when they're not watching them, what are you actually doing? What are you actually doing? When I'm not doing Forex Fridays, what am I doing? I'm looking at this chart. Did that for the last 4 or 5 years. I'm looking at this chart every day. Think about the hours I spent. Missed nights, trials and tribulations, failed challenges, lot, lots of stress, not studying long enough for school. There's things you go through. Literally sacrificing your health because you ain't getting no sleep. It's part of the game. 15-minute swing high, rated here. What do? Go down to 1 minute. You're waiting for a fair value gap that forms above, because that's the crucial point. Sorry to not say this, but it's a really crucial point. Above the Asian session open. Where do we have that? Right here. You can even see it. This was the last Asian session model and trade that I posted in the channel. Right? You saw how that was successful. There it is. Fair value gap. There you go. Look at that swing low. Notice how the swing low is not on the same level as the end of that fair value gap. I don't like when the swing low and the fair value gap are equal lows. Like if that swing low was just like this on that fair value gap, I'm not taking it. I'm not taking it. I'm looking for something else. I'm not taking it. I'm looking for something else. This one too. Let's just say, like, hypothetically looking at it. Look at this. See how the fair value gap? See how they're different? Subtle differences, but I think it makes the biggest difference in selection. Look at that. This fair value gap is not through that swing low. 1, 2, 3. It's this one. It's that one right there. So that's the one I'm taking. I'm very specific in the entry because it's the one I've noticed over time to be the most successful and dynamic one. Let's see what happens when price hits it, trades into it, boom, short, dynamic. Where's the sell happening again? Man, oh man, oh man. Sound like a broken record, dog. Premium. But nobody else wants to talk about it like this. Everybody else wants to talk about indicators. Let them talk. They don't know what they're talking about. And everybody wants to make I know the new algorithm. You don't know the new algorithm, bro. I know you don't know the new algorithm. Odds are you don't. I just know you don't. I just know these people don't. They're just selling courses, man. It's crazy. They go on Twitter and then it's funny when you see this stuff. They go on Twitter and then they make themselves so mysterious. You know what I mean? So mysterious. Like you never know who they are. Like, granted, I know people want to hide their identities and whatever the case may be. Like, oh, you guys can. Everybody has access to my Instagram. You guys literally know what I look like. I have a whole Instagram. I have like 3 Instagram pages. I have one with flowers and cannabis. I got one with trading, and I got my personal one. I only got one picture on there right now, currently. But I post myself once in a while on my stories and stuff like that. So if you want to follow me on Instagram, follow me on Instagram, bro. I don't care. Do what you want to do, and if you it makes the whole experience more interpersonal, because it's not like I'm somebody that's in New York City, that's trying to hide away and scam millions of people around the planet. I'm not trying to do that, bro. Like you know you literally know my first and last name. You know what I mean? My name is Deontay Goodrich. You know my first and last name, bro. You think I'm out here trying to scam you? You know my first and last name. You know what state I live in. You know what country I live in. You got all my accounts. I am not here to take any money from anybody or try to convince you to buy my book or my course. I heard somebody in the chat yesterday was like, "Yo, where can I buy your course?" I'm like, "Bro, I am the course, bro. You got to come hear it from me. Come talk to me. Let's talk about charts. Let's exchange charts, and then that's how we will gain experience." There you go. Little to no drawdown. Little to dynamic too. It's just a Thursday. 15 pips smacked. 1-to-1, easy. 20 pips, easy. 40 pips, easy. And then so on. What a trading night. We'll trade it all the way through. And there's a one example I'm going to show here before we move on to the next topic, because this is the last example. Let's bring it back. Yep, I already know I missed it. I didn't label it right. Yeah, buddy. I knew it. There it is. So There's one here because I remember my charts like the back of my hand. Okay, so price quickly does what? Purge, revert, done. And we don't got to talk too much about it. We don't got to put no fancy terminology on it. 90-minute cycle this, 30-minute cycle this. Deontay, do you know the 90-minute cycle? No, I don't know the 90-minute cycle. Please don't ask me that question again. I don't know the 90-minute cycle. I do not use the 90-minute cycle. And people already have discredited the 90-minute cycle. There's too much about people making up these terms and stuff like that. I don't disagree. People can find other models, but I just don't think people have found it yet, in my opinion. Um, Look at how this 15-minute swing low is broken. Here, right? Now, I just want you to look. After that 15-minute swing low is broken, think about the reverse side of this model. 15-minute swing high broken, fair value gap forms, short. 15-minute swing low broken. Look at this. This is what I was trying to show in the discussion channel. Here, here. Oh, it didn't break the what? Is it a little higher? I think it's that one. Yep, I think it's that one. I think it's this one. There we go. Has to be this one because it can't be the other one. I think this is where a long position would have been possible. Ah, there it is. See, my eyes be playing tricks on me. It's right here. There it is. Boom. Let's bring it right back into that. Look at it closely. You gotta zoom in because I know I'm blind. Fair value gap. Here, here. Look at that. Fair value gap here and here. Swing high. Right through it. Doesn't line up with that line here. I like when the fair value gap is going through that swing high and there's no equal levels with that swing high. It's a very subtle difference, but I think it makes the difference. What happens? What happens now? Price trades into it. And I want to see if it gets us 15 pips to the upside. So it's so interesting. And where is it too when this forms? Discount. Yeah. Broken record, right? I know, Deontay. You say the most boring things, and people don't comprehend sometimes. I know. Discount. Price trades into it. Let's see if that's 15 pips. That looks like it's a little more. 20. Wow. Literally the reverse of the model that I'm showing here. 15-minute swing low broken. 1 minute fair value gap that breaks the swing high. Boom. There goes your little scalp and a discount. Look at where it trades back into. What a coincidence. What a coincidence. Right back into the Asian session open. After trading into the session open again, it then just melts off. Yeah. But generally when I go into the Asian session, I'm only looking for one side. So if I found this buy setup first, I mean sell setup first, I'm taking it. I'm not gonna go in and look for the buy setup and get that greedy because anything can happen. And if I'm already making money off of this sell, I am not gonna do anything to try and combat that and potentially lose that money. But it was successful. Just in hindsight, data, it's nice to see it. So you can see how the market is just so coded, and gives these unique price structure patterns over and over and over again. And even when let's see what happens when it breaks this swing low. I didn't observe that either. Just that 15-minute swing low. My first time observing it myself. Let's see, do we have any fair value gap that breaks the swing high? My eye goes right here. I see it right there. That's the first fair value gap that breaks two swing highs here and here. It's the same pattern. And like I said, you don't got to be a genius. And you don't have to have a ton of experience to know it. There you go. You go long inside that. Let's see. Notice as well, where is this entry technique happening? Discount. When is it happening? After rating a liquidity pool. Look at how this buy right here is so much better than buying up here. Think about the traders that came in here. Just think about it. Look at where it is now. Think about the traders that came into this market and said, "Oh, snap, I should be buying." They got smoked. I don't want to get smoked. I want to be right. And I know most times to be right, you want to be opposite to what everybody else is doing. Somebody and I don't mean to be harsh when I say this, to be honest. But let's say somebody sent something in the Telegram channel, and take it how you take it. You know what I mean? Someone sends something in the Telegram channel. They go, "Oh, I'm bearish on dollar." I would look at the chart. I would analyze it. And I'd be like, "Oh, I'm bullish," and I would be counterparty just because they told me that they're bearish, right? Like better scenario. Sorry, because I'm rambling here. Because this stuff excites me, and I'm a little stimulated because this I love this stuff, and I love preaching and telling you guys like the ins and outs, and just be reasonable, bro. Um, let's say somebody sends something in the chat, right? Like a signal. They tell me sell gold. Like man, people are ridiculous. Someone, let's say I would I would honestly delete the signal. If they send a signal, I would delete it. Let's say someone did send me a signal. They private messaged me a signal. Yo, sell gold, Deontay. I'm gonna buy instantly. Instantly gonna buy just because they told me to sell because I know most people are wrong. And odds are, normally going opposite to other traders' trades, you will find some funny, quirky pattern. For some reason, when you go opposite to everybody else, you tend to find profit. It's such a weird thing because everybody here is going long, and I win. And the model is I'm going opposite to these people here. There's a handful of people that are also going opposite and catching this. Now I don't know how they're doing it, but this is the way Deontay displays the market price action with that model. That's it. And the same thing happens here. I'm buying down here. Think about the people that see the market already down here like this, and they're trying to sell it. And they're trying to sell it. Now, sometimes it does work out because we can see there's moments and times where the market does give an opportunity to drop 10, 15 pips. And that's substantial, at least for a day trader. But then you run into those moments where the market turns around. It just doesn't make sense. You've already missed the best price possible. You missed it. And then I want to see what happens going into Friday. Speed it up real quick. I wonder if that buy side up there gets hit. That buy side, that 15-minute swing high, if we get back to it. And even the one all the way up here, too. News comes out. Probably doesn't get there. Let's speed this up. No, it doesn't. But I wouldn't be surprised next week we get back up to this high for you, Jay. But 1% gain right there, or then some. Because like I said, it dropped even more than 15 pips from that sell setup. It dropped even more. So it's unrealized gains, of course, but we're not going to count it. But I just want you to keep your mind open to how this model can give you more than what you're asking for at times. We were only looking for 15 pips, and it ended up giving us 50 pips. Come on. Come on. And all I was risking is 15 to potentially gain 50? I'm taking it. Taking the 5 to 1. And that's 1%. Now, out of all the days, that's one. Yes, 2%. So if we were to go back and count all the days, a gain of 1%, a loss of 1%. Break even. You're right where you started. 0% gain. 1% gain here, 1% gain. You're up 2% of your account. And you didn't do much. You didn't even sit here and overanalyze like these folks here on TradingView, bro. Like if it would load. Come on, load a chart so we can see these indicators. Like you're not doing all this stuff. You're not doing this. Look at this. Garbage. Not to be rude. Not to be rude. But it's garbage, bro. It's garbage. It's garbage. That makes sense. Look at everything that these people post, bro. What? Yo, what are they posting on TradingView? I don't even understand what's going on here. I don't even know a stotch. I don't even know what indicator that is. or what this is on the side of the chart, or what these lines are. A, B, C, D, what? Formation? Something like that. Oh, I don't even know what this is, man. But yeah, man. This is all you see on TradingView. Look at this. Look at this, man. What? I be trying to tell people, bro, like, and just man, it's so sad to say this, bro, but like I said, I don't care about the likes, but just consider the content quality that people are putting out and how much more publicity that they get versus other people that are actually putting out gold. About 56 likes, right? About 56. All right, let's go to Forensic Forex. Like I don't care. 4 likes on my last daily update video on me calling US oil higher on the daily draw. 4 likes, 1 comment, right? 89 people viewed it. 89 people viewed it. This person posted. She probably got way more than 89 people that viewed it, but got 56 likes for a garbage chart like this. No disrespect to this lady trader, but hey, it is what it is. The industry is full of nonsense, bro. Nonsense, bro. Frustrates me, but hey, what are you gonna do? You're just gonna make your money. Um, Trend identification. This is gonna be a long one. It's gonna be a long one. Oh no. We're gonna do it on this one. Yes, sir. All right. I'm gonna delete this. Remove drawings. And we're gonna be going back into 2023 because it's just hindsight. And I already called this and already capitalized on making trades here. So if we come to the top here, just to check to see if we got people still in here. We got 7 people here. Thank you guys for being here. I really do appreciate it. This is a gold update. February 6th, 2023. Right? I did a whole 2023 daily tracking. I did an update every single day on gold for the end of the month for February. And then 8 March, I did March. GU. I did AU. And then I did UJ. And then I did EU. Then I did gold again. And I did AU. And then things got a little busy in the last couple months of the year. And I wasn't able to do the 2023 daily tracking anymore. And I already spoke about that. But you can see here, this is the beginning of the year, beginning of the month of me speculating gold. I have all these levels priced out. I got all the algorithmic levels: 1800, 1820, 1850, 1880, 19 big figure, 1920, 1950, 1980, and it repeats, so on and so forth. Looking at the price action structure here, right, on this day, we can see how price comes up and sweeps a high and then sells off really fast. Breaks a swing low formation. 1, 2, 3. Now, I want you to see how the end of the month looks like. This is gold at the end of the month. Look at where gold is at the end of the month. This is going into March. So this is February, and this is going into March. If you look at this, and you already know this because I posted about it, the daily bias trend formula. What has occurred here? Swing low broken, lower swing high. Odds are you're going to be bearish. This was a great example in gold. A lot of people don't know about these videos because they just haven't had the time to check it. These videos are short too. They're like 3 minutes long. I don't talk too much. I know I talk a lot here, but this is the only time I get to spiel everything out to you guys in one jump and to get your attention. There it is. Lower swing high, and it sells off for the rest of the month. Look at the progression of it and how it does it. Yes, it gives a false break because the trend is normally going to form in 2 ways. It's going to fail to break a high, or it's going to break a high and then start trending in the opposite direction and give a false break. So this is it right here. This is it. And let's do something a little extra here. Just because of my mess up earlier for not sharing the screen, let's throw IPTA on the chart. Let's throw it on the chart just to show why I like to use it. This is the beginning of February. Let's count back 20 days. 20 bars. Now, people keep saying, oh, but It says 28 days. I'm not quite sure why it says 28 days, but if you count physically from here, you count back 1, 2, 3, 4, 5, 6. This is 20 bars. Period. Done. End of discussion. 20 bars on the daily time frame equates to 20 days. Not counting weekends. Not counting Sundays. Mm-mm, mm-mm, mm-mm. There we go. I'm going to cast forward in 20 days or 20 bars. Get that right. And we're off by one. Boom. So basically, pretty much 1 month. This is the playing field we have to find setups, whether that's swing trades, position trades, or scalps. Once you figure out the trend, you can kill the market any way you want. Being a scalper, being a day trader, or being a swing trader. You have that power now to do it because you know the trend and you know where the market's going to go. Retail traders don't know where it's going to go, right? If you look at the COT data report and you look at the longs versus the shorts versus the commercial speculators versus the managed speculators versus the large speculators and then versus what? The small speculators, which is retail. Most times than not, if you look at commercial speculators and you look at the small speculators, they are opposite to where they are in net longs and net shorts. They're always opposite most times than not. And that's a good sign. Mm, run it back, run it back, run it back, run it back. So what do we do with the IPTA data ranges and the way I utilize it? Because people think it's only one way you can use it. When ICT dropped all the charter videos and then you see, oh my gosh, you can use IPTA 3, 4 different ways, 5 different ways. Here you go. That's the 20-day high because on that day, you look back, that's the highest high we have. So we're going to use that as the 20-day high. This is the 20-day low. And it's a swing low. This is the 40-day low. Here. This is the 40-day high. Here. This is the 60-day high here. And this is the 60-day low here. So we got all these potentially significant levels on our chart. Just annotated here. We have the monthly opening price here. What do we know about the opening price? Say it all the time. It's fair value. And anytime price is above, it's in a premium. Anytime price is below it, it's in a discount. Price opens for February, runs above it. Let's just write this out. Runs above it. Seasonally, and I know this as well because I remember the seasonal tendency for February for gold was bearish. So I was like, okay, we may get some bearish price action going into the month. But overall, looking at the price action formula or the trend formula going into this month, if you listen to the daily updates at the beginning, I was speculating gold to go to 1980. We broke a swing high and it looked like we were going to create a fair value gap. I was speculating, fair value gap might form higher like this here, higher swing low, boom, go higher. That's what I thought was going to happen. It's going to run into 1980 up there. But then it didn't happen. What happened? There was a false break. This is why we got to wait for the confirmations of the swings. Unless you're an aggressive trader and your intuition is right and you want to get into the market before that swing forms, do it. Sometimes you win big and sometimes you lose big too. Price comes up, runs that 20-day high. Instant reprice to the downside. Instantly, right? Instantly. But if we were going to break a swing high, here, what should form? A higher swing low. Let's see if we get a higher swing low without breaking a swing low. Think about that. If we broke a swing high here, that would put us on caution. For what? Bullish momentum. We need to see a higher swing low come into play without breaking the recent lower swing low, which is down here. It gets all familiar once you start to realize how this market trends. Instead of giving us a higher swing low, instead it breaks a swing low. So people will tell me, well, Deontay, I, I didn't find a trade. I didn't find a setup. I can't find the trend. Well, you have to be a little patient because it's still unfolding. Now, for some traders, they may have an edge here. And what is this? This is a Larry Williams smash day candle. If you know, you know. If you don't know, read the book and you know that this is a Larry Williams smash day candle. You would sell at this candle's low here. That's how you would probably catch this large move down and be ahead of the retail traders. But that's a conversation for another time. I have a video talking about it on YouTube. Very simple models makes people a lot of money and being able to be profitable. Larry Williams did not have the Robbins Cup world record for no reason. This guy was using very methodical and straightforward price action models to win that world record in the Robbins Cup. No one else has broke it yet to this year. No one has broke his record, making $1 million. Okay, boom, price sells off. We don't get that higher swing low. Instead of getting higher swing low here, instead we break a swing low. So what does that do? It flips the whole thing around. So we're not looking for bullish momentum anymore. We're looking for bearish momentum. We're like, oh, it broke a swing low. What should happen now? We should be waiting for a lower swing high to form. Now that doesn't happen right away. Some people think, oh, it happens in the next 3 days because a swing point is 3 bars. 1, 2, 3. That doesn't mean after it breaks this swing low, the next 3 days it's gonna form. It might take a little longer to form, or even a week or two to form. But let's play it out and see what happens. There we go. There's your lower swing high. Let's make this red so we can paint the image. Look at what we hit too. Look at the level that we just hit too. Look at the level. Look at the IPTA level that we just hit. That's the 40-day look back high. The 40-day period. That's that 40-day quadrant. This is 20. Because I know it probably looks so bare. People are not looking at a chart so naked. 40 and 60. And that's 20 forward. Look at how it hits that IPTA look back range old high. Out of all the old highs that it could have ran into, I want you to think about this. Out of all, it's so crazy when you start to look at this. Out of all the old highs that price could have ran into, the one it chooses to stop on the dime on is that 40-day look back one. Why? This is something I've noticed over time when I use it this way. I was like, why is it stopping right there on that high? Or why is it giving a specific reaction around that level? It was very strange for me. And then I kept doing it month after month. Now, not every month did it produce the same results or the same storyline I would want, but it got me closer to the picture. And I was like, wow, that's interesting. So I was like, oh, so this could have been a level overall, an old high. That's a PD array. An old high is a PD array right there. Runs right into it. And notice, look at how it closes too. Look at how it closes like right near the level. Hits right into the level. Closes so close to the level. It could have stopped here, right? It could have stopped here. It could have stopped here. It could have stopped here. But out of all the highs that it chose to run straight into, it smacks that one. Just interesting, man. It's just very interesting. Play it forward, and even notice the next look at the next candle. Just look at the way it's forming around the level. Look at the way it's just forming around this level. Look at all the candles that form next around that level. Even hits it again, runs away from it. Boom, runs through it. The next candle opens and closes on that level again. Come on, guys. Now, of course, there's other algorithmic levels as well, because that's what I have marked off on the chart. I had these here. 1850, 1820, 1880, 19 big figure. So those things do play a role. Not saying it's just one thing because it's a blend of everything. It's simple and it's simple, but then again, it's so complex when you start to look at it from different points of view. You're like, wow, this market, whoever coded this market had to have been a genius. Because how did they even manage to think about it like this? And then after we get that confirmation of that lower swing high, which is this candle here, we're just gonna put SH because I'm not gonna waste time. Swing high, all right, and then we got lower swing high LSH. That's your bearish trend formula, guys. Odds are market is bearish. It's very simple. Now you know daily draw. Now you know daily bias. Now you know how to predict where the market is most likely going to draw to. You're not guaranteed that because the market is going to fluctuate and go through different cycles. Yes, it's going to come back up and maybe raid this high again and then go short. You signed up to trade this, guys. I, it's what you signed up to do. Fundamentals go out the window sometimes. Technicals go out the window, and it does things that we just can't control. It's out of our scope of comprehension. But we're trying to get as close to how the market's going to form. And this is my way of explaining it. If I had to explain it to a child, if I had to explain it to my daughter or my son, which I don't have, or my future kids, this is how I would explain to them and teach them how to find trend. Daddy, how does the market go up? Daddy, how does the market go down? Well, son, well, daughter, this is how it does it. Step 1, step 2, step 3. These people can't even tell you how to find the trend. Man, I be trying to tell y'all, man. This industry is messed up, bro. Messed up. Lower swing high. Now, after I get that confirmation of that lower swing high, I can simply do what? I could be short every day. That's one idea. Because people like to overanalyze. Well, Deontay, how do you think about it? I could be short every day at this point. Every single day going into the day, I could be looking for shorts. How am I doing that? I'm going short above midnight opening price. I'm going short above London opening price. I'm going short above New York opening price. I'm going short above price. I'm doing those things from an intraday perspective, right? For a day trader or a scalper. Now, for the swing trader or somebody that doesn't have a lot of time, just wait for an up day and sell after it. What is this candle here? It's an up close day. Okay, cool. What are you going to do after this up close day? You're just going to probably look for a sell opportunity. Where are you going to place your stop loss if you're going to be a swing trader? If you're a swing trader, you already know that you're going to be taking on a lot more risk. You're going to place your stop loss above the most recent swing high. That's all you're going to do. The most recent swing high we have to price, that's where you're going to put your stop loss. Why are we going to put our stop loss there, Deontay? Because we believe that if the market is going to continue to depreciate in value, it will most likely not want to run this high. It will not. Right? You got to think outside the box a little bit, or just think about how the market is printing bearish trends, and notice how it leaves certain highs unbroken. At one point, one of these highs are going to be unbroken. All these highs here, broken, broken, broken. Raid, 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 raid. But sooner or later, they're going to stop raiding those highs. Now, yes, we got that PD array here, right? Got that SIBI, right? Where does the lower swing high form? Inside the SIBI. It's a no-brainer. It's going to obviously fill it in the inefficiency. The lower swing high is going to print somewhere in here. Sometimes it's not inside it. Sometimes a little higher. Sometimes it's a little outside of it. It's not always perfect. But I think people just want too much of, they want to control price to their standards, and people have very like strict expectations of the market. It ain't gonna listen to you. It ain't gonna listen to you. Look at that. Go short the next day. Boom, instantly short, man. Short. It's a banger. It's almost like I have 20/20 vision. How do I know that tomorrow is going to be a down day? I don't know, but people will sit here and argue with me and say, no, Deontay, it's going to be up. It's true. It can be. but I think that there's going to be a good odds of probability of it being down. How did you know that, Deontay? Because I knew bearish momentum and then lower swing high. And then when you study this after, I don't care where it is on your chart, go back and look at all the months where the swing points are broken and follow the bullish trend formula. And you'll see time and time again, it keeps forming over and over and over again. Boom. That's how you read price action right there. You're not going to get it right every day, but you want to be at least profitable and managing your risk. Look at what levels it hit by the end of the month in 20 days. Look at the levels that it hit. Wow. What a coincidence. What a coincidence. It hits this low, right? Look at the day. Look at the day it specifically hits that low, that swing low, that 20-day look back low. Look at the day it hits it. Boom, reaction. Crazy, right? It's crazy. Sell side liquidity, of course, because it's rating sell side here. But out of all the swing lows, that it does this dynamic reaction up in a way. It opens, it sells all the way down, and then it comes back up. Out of all the days it does it on this day at this level. That's strange. It's very strange. Because why did it not do that same move here on this swing low? Why did price not come down or even this swing low? Why did price not come down, hit that swing low here, and then give a rejection like that? I don't know why. I don't have the answer to that. But it's very strange to see that why out of all the swing lows, this 20-day look back period range, this is the low. It decided to give a reaction like that. Interesting. Now, could this be a trade idea? Absolutely. These are things that I don't utilize it this way per se, but when I look at this, I'm like, oh, that could have been a trade idea. Wow. Break the IPTA 20-day low. All right. I should buy that. And then look at it vice versa. Break the IPTA 20-day high. Oh, I should sell that. But with the context of what? Macros, seasonality, COT data, hedge program data, then you start to really get that edge. And then, yeah, that's the month right there. Boom. Hits into that 60-day high here, right across. Boom. Look how clean the opens and closes are around that level is. Look how clean it is. And then it comes right back down, like I was talking about on YouTube. Here, 1820. Got real close to 18 big figure. And I think it does trade a little lower going into March. I believe, I don't remember. No, it completely turns around. Look at that. Complete quarterly shift. And then that's when gold hit 2K again. And gold was just going crazy at that point. Hit 2K and the whole thing changes. But look, slow it down, guys. Slow it down. Look at this again. Right here. Boom. Let's delete everything off the chart. Let's follow bullish trend formula on a day-to-day basis. Just looking at it. Okay, it most recently broke this swing low. 1, 2, 3. We should be getting a lower swing high. Okay. Let's see what happens. Just to keep following along and see how easy it is to predict the trend. It takes a while for it to get in page. Okay. Breaks a swing low, right? Price breaks a swing low. We should be getting a lower swing high. It looked like it was just about to form here. It doesn't. 1, 2, 3. It doesn't confirm it because it doesn't break that middle candle's low. So it's not confirmed. But it's a lower swing high. That's why I said if you're going to be aggressive and try to predict that lower swing high and you get it wrong that next day, you're going to get burned. The market completely changes trend. It doesn't print a lower swing high. Instead, it breaks a swing high itself. So here we got a swing high. So you could say what? This is a sell side raid. That's how we would categorize it. That's how we would categorize it by what we're looking at in price action. That's how we would categorize it. And this is March, beginning of March. And this is the open. The black line is going to be the open. Here. After breaking that swing high, what are you doing again? Bullish momentum. You need to wait for a higher swing low to form. Where's your most recent swing low after that break of that swing high? Here. So we know we don't want to see price break this low. If it breaks this low, we're going back to bearish. Simple. It's a simple 1, 2, 3 step analogy. 1, 2, 3. Look at how it looked like it was going to break it, right? Chasing. Look at retail traders chasing it. Where does it bring itself again? Below the open of the month. Coincidence? I think not. I think not. Brings itself all the way back down. Retail traders do what? Breakout. Yo, we're going long. Market takes it right away from them. So I don't like the breakout trades at times. The breakout trades are risky. But if it's a model that you like and you like the breakout, take the breakouts. It's cool. Price breaks up and then breaks back down. Pulls price back down in a discount. Discount. Like the trading IQ got to be up there, man. Got to study. Got to study. IQ has to be up there. No excuses. This swing low is higher. This one, boom, higher than that one. What can we expect now? Going forward, we would wait for what? Every down day we can buy, or every day we should look to buy and buy in discount. Period. That's it. Now let's play it out. Let's play it out. See what happens. And then we got what? Targets. Let's just projections now. Because market chases what? Swing highs, swing lows. If it's gonna go bullish, it has to be taking out swing highs. Let's just mark out every swing high we have now and just see how it reacts around those levels. Now I know we have the algorithmic levels too. We're not going to get into that, but let's just mark out every swing high we have on the upside here on the daily. Every single one. And it's also going to create new ones as well because it created this one here. To go down like this, it created a swing high. So it created one to rate it. Let's see what happens. Whew. Wow. How'd you know it was going to be bullish, Deontay? Right? How'd you know? Because I'm telling you, most people are going to sit here and tell me that this is what? Most people will tell me that this is bearish. It's the same thing that happened with US oil. It's the same thing that happened. What I'm showing you is the same thing that happened with US oil. Breaks a swing high, higher swing low, down day, buy. Look at that. The down day, look at that. This comes with experience, guys. It's not something I just woke up and was like, oh, I know how to do this. I had to study this a bit. And I was like, bro, there has to be something in this market. Has to be something in this market that's so simplistic that I don't need indicators because the market is just telling me. You got to be able to read the signs, though. This is where that trading IQ comes in. You got to study more. Boom. Targets to swing high again. What would happen after this? We could either get price to continue to shoot up higher, but we know that what's happened sooner or later, we're going to get another lower swing, a higher swing low. Sooner or later, there's going to be another higher one. It's just how it goes. That's how the market's going to go. And these swing lows, what's happening? If I had to verbalize it and put it in a story or an analogy, the commercial speculators are reloading their longs while retail traders are going short. Each swing low, longs are being built in. Swing low, longs are being built in. How do I know that? Because after making this higher swing low, it breaks a swing high. I could tell myself that, oh, this is protected now. This is definitely protected now. Price is never, let me not say never, but price is less likely to come back down to those swing lows. I don't need an indicator to tell me that. What can we do as well? We wait for down days. Or every day we go to buy. Like I said, you pick your poison on how you want to do it because I'm trying to adhere to everybody's trading schedule or try to see and accommodate to how other people that aren't in my shoes would trade this model or trade this idea. Many ways to do it, plethora of ways. Man, look at those candles, large, man, large. And you want to catch these days, man. Those are exciting days. But how do you catch these days here? You gotta wait for the small one. You gotta wait for the small one. Trading IQ. You gotta be on point. And when are these large days happening? Most likely they're going to happen on Tuesday, Wednesday, Thursday. Now, not to say it doesn't happen on Fridays or Mondays. It does happen, but they should most likely land on Tuesday, Wednesday, Thursday. Down candle. What can I anticipate? Probably to buy. Now, that doesn't mean I'm going to be right to buy after this down candle. I'm just rolling dice. I need to roll dice. It's high up, just to say. I would say at this point, most likely a higher swing low needs to form. So some type of pullback is expected. Where is that pullback going to form? You got two spots to see. Either somewhere within this range or somewhere within this range. Now, I would obviously prefer the lower swing low to buy in there or catch that lower swing high because it's cheaper. If it drops all the way down here, it's a cheaper buy. And it's where it does that market shift here. Swing high broken with speed to the upside. And let's play it forward. Wow, an up day after a down day. What do you know? It's almost like I'm psychic, but I'm not because I could get it wrong. But when I get it right, it definitely feels good. But then for other people to see it and be like, "Dang, Deontay, how'd you know? And how were you able to call that?" By what I just explained. It takes time. I know it's confusing at first. You're like, "What?" Especially if you already have a trading model and you've already been trading a certain way or you already been taught how to trade for the last, 2 years. You already been cemented the blocks. Your foundation has already been cemented. It's hard to break that up when someone else is telling you different. It happens. I had to learn differently too. Wow. Look at that. Right back up to that high. So that's just how you would play this out. And look, like I said, the higher swing low would form inside one of those PD arrays. Here you go. That's your higher swing low. Another blue line. Higher swing low. And what does it make? Another high. Look at that right here. Here. Boom. Same thing repeats again. It's always been in front of your face this whole time. It's been in front of your face the whole time you've been trading. The whole time. Go on YouTube and go on YouTube. Promise you. Go on YouTube and type in how to find daily bias and watch somebody's video trying to tell you how to find daily bias. I guarantee you it's not like this. It's not. And this is the most basic form of trading. This is trading 101. This is the fundamentals of how to trade. Higher highs, higher lows. But nobody's showing people how to find it on the daily or the weekly or the monthly. The same ideas that I'm showing here is fractal. Don't believe me? Let's check it out. Let's go on the weekly time frame. Don't believe me? Let's check it out. Let's go on the daily time frame. Look at where price is right now. Recently created a swing low here. I guarantee you, if we go back and find the most recent swing high that was broken, boom, boom, and then you start to see how powerful this is. You start to see how powerful this is. If you could apply it on the weekly, dang, you probably could apply it on the monthly. Yeah, you can. Swing high broken. What do you have to do? You have to wait for a higher swing low. Now, of course, this higher swing low took a couple months to unfold. It took 3 months to unfold. You're going from December, January, February, March. It took 3 months, but you have to be patient. If you're the position trader here, you got to be on point. You can't be buckling thing. You can't be flinching at the next analysis this next guy said that's in the community that has 500,000 followers or a million followers. You can't flinch at that because I don't watch other people. I don't watch ICT no more. I don't do that. You think I watch ICT to this day? I don't watch ICT. I learned what I learned and I'm done with that chapter. I closed that book. I'm done. I'm done with that. You got to start building your own wings at one point in time. Higher swing low. Why is this a higher swing low? Look at the most recent swing low. Oh my gosh. Boom. Bullish. Market goes crazy. One, two, three. It's confirmed because the middle candle here is broken. What can you do after this third candle? If you're aggressive, right? You could go long. This market doesn't even give anybody the chance. This market doesn't even give anybody the chance to get a discount buy. It opens and immediately for that weekly candle, straight up. Go straight up. Right there. Then we got a down candle here. This is where gold is starting to push 2K. right? Got a down weekly candle. What does it do as well? Breaks another swing high. The formula just keeps repeating itself. Keeps repeating itself. Let's see what happens. Play it forward. Got a down. You got a down week. Let's mark that off. Down week after confirming a higher swing low. Let's see what happens next week. Oh, we got another down week. Cool. Let's say you're holding still, or you took the loser, right? Another down week. You got another opportunity to do what? Buy. Look at that. The next week goes straight up. Down week. Let's see what happens. Oh, it's not finished loading. Oh, snap. Down week. Down week. Right? Another down week. And then you start to see how easy this is. I'm telling you, you feel like a fortune teller sometimes. Not to say I'm not guaranteeing profit for anybody. You start to be able to recognize things. Your IQ starts to get a lot better. Your recognition is just like on point. You're way better than most people talking in the chat. You're way better than most people in your circle because you know how simple it is to find trend. All of a sudden, your trading goes from being so minimum to all of a sudden it's then brought to this another level just because you can read trend. It's like the world just opened up to you now. And eventually you're gonna get quarterly shifts every 3 months. You're gonna get a quarterly shift, and then what happens? The market changes trend, and the same thing occurs over and over and over again. It repeats itself. If a swing low is broken, wait for the lower swing high, then look to go short for every up week. Imagine if I took, imagine what I'm showing on the daily with what I'm showing here on the daily. Instead of I showed this on the weekly, it would take a long time. People would be very impatient with me, right, to see this model come to fruition. But when it comes to fruition, of course they're gonna flock. They're like, "Oh my gosh, you caught that? Oh my gosh, you did that?" But you weren't paying attention weeks ago when I said, "Oh, I think there's a momentum shift going on." You said, "Nah, this guy don't know what I'm talking about." And the forensic forex, who's he? He's nobody. I am nobody. I am. Regular old 25-year-old dude that lives in New York. I'm nobody. I'm just like everybody else in the chat. It's just that I studied it a little longer. That's it. And then I sharpen my skills every month, every day, sharpen my skills. And just to play it out. You see that? You see that same pattern repeat again too? Just showing it here. No, I know it's hindsight, but just showing it again. You can see that's a false break. We can clearly see it's a false break. Yes, BPR, balance price range, great. Kudos to those that see it. But look at that. Swing high broken. Make this blue. Swing high broken. Swing low here. Higher swing low. 1, 2, 3. Up week. That fourth candle just fume straight up. Next candle here opens. It looks like it opens. I'm not sure which way it goes at first, of course. It's on the weekly chart because it could have went down and then it could have came all the way back up here and then it could have went down. So just looking at it, you can see at one point in time it opened and this thing shot to all-time highs for gold at that moment in time. December, yeah, all-time highs came in for gold here. After this down week here, what happens? You got another higher swing low, and then we start going into 2024. All right, here we go. Swing high, broken. What should happen again? Higher swing low, right? Did we confirm that higher swing low yet? No. We didn't get that middle candle broken. 1, 2, 3. We want to see that broken. You don't want to jump ahead and be very aggressive, right? You don't want to jump ahead and say, "Oh, next week I'm going long on gold," because you go long on gold next week, and then all of a sudden it just tanks down instead on you, and that's on you. Sometimes you got to wait for the confirmation. Unless your intuition is really telling you, "Yo, I know for sure it's going to go up. I'm going to get a jump on retail. I'm going to get a jump before everybody else notices it's going to run higher." Then you take that risk. You risk properly, and then price should expectively, and I would hope in your sake, go in the right direction. I want you to win. So down, Down week, bye bye. It continued to get back up here. Gold could break all time highs again, right? And I had a conversation with a good friend of mine from Australia. I was telling him that I suspect gold to still be very um worthy of a metal to be sought after. Precious metals are going to be sought after year after year, month after month, generation after generation, decade after decades. When I'm dead and gone, gold is probably not going to be at 2K anymore. Gold is probably going to be at 5K an ounce. Who knows? But we know overall, just looking at the gold chart, rate of return, great. Rate of return, cryptocurrencies, great too. I can't argue that. Cryptocurrencies are going crazy too as well. But it's the same idea. Like let's say I jump into crypto because people say, "Oh, can these same ideas be translated to other asset class?" Of course they can. Why am I going to say of course they can? Because of what? They're all manipulated and coded in almost the same exact nature. Maybe the coding and timing is a little different when the volume is injected into the market. Maybe that's a little different in the way they're coded, amongst the stock market, among FX, amongst futures, amongst crypto, amongst commodities. It may be different in the timing of injection of volume, but the overall structure and sequence of the market, it's all the same. It's no different. Just looking at this yearly chart, think about the same idea that I was showing you. Apply it here. It's crazy. You start to see this stuff, you're like, oh wow. But you'll be betting hard, of course, because it's such a higher time frame. And it takes a lot more time. So you better be right. If you're a position trader, you better be right. What's this? That's a higher swing low. Where's the most recent swing low we have? Right down here. That's it. That's 1, 2, 3. This is cryptocurrency. This is Bitcoin. Believe it or not, yes, Forensic Forex is showing you a Bitcoin chart. That's the higher swing low after breaking the swing high. 1, 2, 3. We just confirmed right here. We just confirmed cryptocurrencies higher swing low with the middle candle being broken here. What could you say? If we get any down year for crypto at all, you better buy. If crypto ever closes down for a yearly candle, you better be buying the next yearly candle, the entire year. Now, do your due diligence. I don't want nobody suing me. Um, Forex and trading cryptocurrency is a risk that you take on yourself solely. Buying and selling is the risk that you take on. But yeah, cryptocurrencies look to be pushing back bullish. I don't know much about it. I know people can say, "Oh, the halving cycle and this, section, the third." I just own I own a small portion of it, and I'm holding. Hey, whatever the case may be, I'm in. I'm holding. I don't even want to look at it. Whatever I can afford, I put it in there. Whatever it's $100, whether it's 20 grand, 30 grand, whatever I can put into it, hold it. And it's not. I don't own Bitcoin. I would Ethereum because it's cheaper. It's just expensive to buy. Ethereum is much more cheaper. So Same thing applies here. Ethereum. Same thing applies. Swing high broken. You were looking. Oh, we don't. Yeah, we don't got a higher swing low here yet. So maybe it's going to take a while for it to form. Maybe it's going to come up and then come back down, right? And then make the higher swing low. But Bitcoin is showing the signs of it right now as well as we're looking at it. But that's your overall basis of finding trend. It's a basic comprehension. I feel like most people don't know this when they start trading anything. I'm just like, wait, you didn't learn how to find trend? So why are you trading? I was like, wait, you don't know how the daily candle is going to reach for the previous daily high and continue going in that direction? You don't understand that concept? So how'd you even start trading? Because that was like my beginner basic blocks to like understanding trend. And anytime I would call these levels to people, they would always disagree with me. And I didn't mind because I did get it wrong. I got it wrong a couple times. But then when I started getting it right, they were just like, what? This guy is just calling these highs and calling these lows so easy. How did he know the market was going to trend bullish or bearish? Because like, oh, because it's higher high, higher swing low. And they're just like, oh. And I'm just like, yeah. And then they still don't even apply the knowledge that I've even presented them in front of their face. So I'm just like, hey, if you know, you know, bro. Um, but yeah, that's trend identification. We're gonna jump right into turning points of kill zones. So this is more for the scalper. So I'm trying to adhere to the demographic of traders, because I'm a swing trader at heart. Once I figured out how to swing trade, I was like, I'm in it to win it. I'm trying to hold. I'm trying to live my life without having to stare at the charts. I say this all the time. I do not want to be a slave to the chart. I don't want to sit here for 4 hours staring at the chart. I'm in, I'm out. That's why I love the Asian session model. I'm in, I'm out. But when it comes to the kill zones, there's a pivot moment that normally occurs. Now we know we have 820 CME Open or 8:30 news embargo lift, or we have the Heart of London 3 a.m. to like 3:45, something like that, or even a little earlier. Normally I just call it 3 a.m. because 2 to 5, cut it down the middle, about 3 a.m., right? It's normally going to be a turning point during that time period. Now, for the scalper, it might be difficult to realize when that turning point is going to occur. But there's an analogy that Larry Williams teaches that really exploits how to catch that turning point. And it comes by way of smash day candles. And it comes by way of where the candle actually closes. So, for example, I'm just going to look over to the PDF. And that's the hidden smash day. This book is gemmed out. Like, gemmed out, bro. Like, the author at ICT was something, bro. Larry Williams is on a whole nother level. Smash day candle here. So the whole idea is that these are not candlesticks. These are what do you call these? I forgot what you call them, honestly. I've been trading so long I don't even know what you call them. Bars. They're called bars, Deontay. Um the bars here. So it's the same thing, the same way you would read a candle. Open the little wick on the left is going to be the open, and the wick on the right is going to be the close of the candle. But here you can see Larry Williams is just showing a depiction of the model. He's saying that when you get a candle that closes below the previous candle's low, and this is based off of the daily, it's the daily setup. This is why Larry Williams is so successful. Daily setups, man. Like these swing traders be killing it. Um, this looks bearish, and this looks bullish because it's closing in an overbought condition, and this is closing in an oversold condition. So I want to see if he has another thing that shows it right here. Oh no, that's not it. That's not it. That's not it. That's not it. All in all, if it closes below a previous daily low, if price returns back to its high, that's a buy signal. Here, if price closes above the previous daily highs and it gets back to its low, that's a sell signal. Now it's very easy to see it on the daily time frame versus the lower time frame, because when you start to see these analogies on the lower time frame, it can be a little confusing. But if we had to take an example, let's just jump back to gold since we were talking about it, just so we could get the ideology across its point. Let's go to daily and find an example of that. All right, here. This is a good example. Like I said, I'm cherry picking because I can do that right now. That's an example. So look at that. Look at that PDF again. Look at that. The close of this candle is above these highs. Price returns back to its low. That's your sell signal. There it is. Now, Larry Williams did not give crucial details of how many highs it has to close above, which I kind of don't like, but hey, beggars can't be choosers. And this is where the sell signal would come right there at the low. You would sell at that low. So a play price forward. We're not in short yet. We're not in short yet. And now we're in short. Now, where would I place my stop loss based on the idea? Larry Williams did not give a stop loss placement, but I would just simply call it, let's put it at the high of the smash candle. So this is smash day sell opportunity. You could look for a 1-to-1 scenario. So this pretty much is a 1-to-1. So the same amount, the same size of the smash day candle, you're going to look for that and take profit. and use that as your stop loss. So we play it forward, and there you go. That's your one-to-one scenario with the smash day candle. Very profitable, right? Very simple idea. It looks like the market's on an outward trend and it's breaking out. But what happens? There's a false break. And that's something you just can't control. I had someone DM me earlier today, like, how do you know it's going to be a false break? You don't know. Unless your technical analysis and your fundamental analysis and whatever else comes to a conclusion that, yes, market is going to give us a false break here, then you get the jump on the gun and you get your flowers. Everybody applauds you for catching the false break. But 9 times out of 10, everybody's getting tricked up by the false break. Or you're not trading, and then you see the false break and like, oh, okay, glad I didn't get caught in that, and now follow the trend. But you can see how price comes up and then sells off. When is the false break most likely going to occur? This is something I can say. The false break is most likely going to occur after breaking a swing high. Most likely after breaking the swing high, the false break is going to occur. Because I said, this is where the IQ comes into hand. Trends are normally going to start in two ways. It's going to break a high, just like how we showed with gold earlier. It's going to break a high and then go short. Or it's going to fail to break a high and then go short. Look at gold. Look at this bearish trend. What did it do? It broke a high first and then sold off. There's your smash day candle right there. That's that Larry Williams smash day candle here. Price what? Closes above these highs here, here, here. And even, I think, no, I'm going to say not here, but it closes above these 3 daily highs. Price opens. Yes, it runs the high here, which is cool, but we're not in short yet. We're only in short once price gets down to that low with a sell stop, selling on weakness. Look at how it hits you in short and it sells off. That's what I was talking about earlier. So these examples are everywhere and they happen pretty frequently and they can be very powerful if you study the market long enough. That's the same idea that I'm showing here in October 2023 here. It's the same idea that just I'm showing you here on YouTube here, right here. That same model is happening here in October 2023. Boom. So that's a turning point, right? That's a pivotal moment. And sometimes that pivotal moment continues to trend in that direction. You can see it trends off for a couple of days. And let's see if and then it ultimately came back to stop loss. And that's how it would go. But now if we were to look at it on the lower time frame and take that same analogy, you'll see exactly what I'm talking about for the scalpers. So let's go on to, let's say UCAD. And we're also going to incorporate the weekly opening price for this idea. Let's go down to the 5-minute time frame. So we're down on the 5-minute time frame. And let's go to Tuesday. Let's go all the way to Tuesday. Looking at this chart with hindsight, can you locate smash day candles on a 5-minute chart? Yes, you can. You absolutely can. Where are some smash day candles? All right, let's take a look. Remember, you're still utilizing the weekly opening price to be a buyer or seller. So at this point, let's say we're going into the session. A very simple idea. So we're going into the session, price plays out, price comes down. This candle here closes below all these lows here. All these lows, all these previous 5-minute candle lows. It even breaks a swing low, closes below a swing low, and it's below Sunday's opening price. So I'm kind of blending ideas here, right? To frame something here. How would we look to go long here? We would look to go long at that candle's high. Right there. We would look to go long there on that candle's high. If another candle opens and drops and closes lower than that, then we'll be using that most recent lower close candle instead of this candle. So let's play it forward. So we got another candle. Oh, it didn't finish for me. Keeps tricking me. Got another candle here. See how this candle closes? So we're still waiting. We're not taking any trades. I know the market's moving and it's live, and it may feel like you're pressured to sell or you're pressured to buy. But don't be pressured to click buy or sell if you're not confident. It's okay not to trade. No trade is no risk to the equity. You're better safe than sorry. Now, this is still another potential one. So we're not looking at this one anymore because we're looking at this one because it closes lower than that one. So this is the new smash day candle. So we're stalking, it. We're just waiting for it to return back to the high. There we go. Returns. You would be long here. What would you do? Very simple analogy. Like I said, doesn't take much to make models. What would you do? Get in here. Let's say you risk 0.5%. I'm gonna take this off because the colors are throwing me off. We risk 0.5%, right? Or even 1% or 2%, depending on how risky you are. Some people will be risking too much. But let's say you risk 0.5% here. Your stop loss is here. This stop loss is literally 3.5 pips. Let's round to 4. Stop loss is about 4 pips. Okay. Let's say you're aiming for 4 pips to the upside because people be scalping and people be scalping for 5 to 10 pips. And that's cool. I don't have nothing against that. If you're a scalper, you're a scalper, but this is how you would do it. We're in the London session. We're in the London session right there. Let's play it forward to see what happens. We get stopped. Okay, we take the loser. And we're not always going to be sitting here saying we're going to be perfect. We're going to take the loser. That's fine. We had another opportunity here. So let's get rid of this opportunity. Let's just get rid of that. Another candle here closes. Does it? Yeah, it closes below lows. Closes below that low, that low, that low. If price returns back to its high here, we would look to go long. Okay, it went back there. That's where we belong, right? Because we're stalking it. How are we stalking it? We're placing a buy stop there because sometimes it's hard to catch that. Let's say the market does run up really fast and you miss that. So you got to be on time and have been automated and placing that buy stop order here. Or if you want to get in with a market order and get a sloppier entry, hey, that's up to you. Stop loss would be here. So now at this point, price runs up into that candle. You're in long here. You're still in the kill zone. Stops you. Stops you. It's cool. But like I said, you ain't always going to get it right. But this is how you would stalk a turning point. This is for the scalpers mainly. What I'm talking about is mainly for the scalpers. The people that love to scalp, this is for you. And then dang, it turns around really quick on you. But look, it's the same idea, the same principle. Look at that candle on the 5-minute. It closes below this low and this low and that low. Those 3 candles here. 1, 2, 3. It's the same thing here. Let's go back to the PDF right there. But this is a daily. So I'm taking a fractal idea here. I'm taking a fractal idea here and trying to apply it here on the lower time frame during the kill zone. And where are we? We're below Sunday's opening price. So we go long. We were stalking this high. Stop loss where? Here. From here to here, it's 5 pips. It's a quick scalp. I'm not a scalper, but I'm just trying to show diversification to how you could potentially do these things in the market. Continues to trade up, and look at how it gets across Sunday's opening price. And now that's going into what? The heart of London. That's 3 a.m. So it's coincidentally happening around 3 a.m., like I said earlier. And then look, Sunday's opening price. Now we're back above it. Same thing could be occurred or applied on the flip side. That candle here closes above multiple highs. Where would you go short? You would go short at that candle's low. How would you go in? Place the stop. You would place the short here, place the stop loss at the high here. You're triggered in short there, and you would hold to see if you can get price to come back down. And you're stopped. But this is just a small and quick way to find scalping opportunities. People that are looking for 5 pips, 10 pips, this is how I would do it personally because I think it's more dynamic in nature. Now, not to say I have the answers to it because I'm not a scalper at heart, but when I look at these analogies and I try to break it down and make it as simple as possible, this is how I would apply it during the kill zone. Now, you can use this on the 15-minute, the 30-minute, the 4-hour, whatever it is, the daily, the weekly. It is all fractal. I showed this too. Let's say if I were to take this off here. This is a 4-hour smash day candle. Why is this a 4-hour smash day candle, Deontay? Because the candle closes above highs. One, two, three, four, five. Not that the number matters, or it can, because maybe there's something else to the model that I don't know. But in general, you can see it's closing above the highs. What did he say here? It's closing above the highs. You need to sell back at that candle's low. All right, no problem. Where should I go short? I should be going short here. Look at the profitability. You go short, it takes out that low and it continues to sell off. That's a turning point. It's a pivotal point. Pivotal point. It's also doing it in what? A swing formation. One, two, three. So oddly enough, these smash candles tend to be the swings. It's interesting when I start to piece it all together and I start to see it from this point of view. And it can repeat over and over again. Look at this. It's the same thing here. What's this? And this is 9 a.m. And this is on the 4 hour too. This is 9 a.m. at the 4 hour. This 4 hour candle is printing in New York session. 9 a.m. after the news is dropped too. You're in short right there. Where would your stop loss hypothetically be? The candle's high. You could be aiming for a 1-to-1, or you could be aiming for something very minimalistic, whether it's 10 pips, 15, 30, whatever it is. I just want to see what it is before you get stopped out, just to show. So about 16 pips off of this idea, at least on the 4 hour. But the 4 hour, you're looking for bang. You're not looking for small things like that. You might as well just jump back down to the lower time frame. But oddly enough, when you follow this model long enough, you will see how rewarding it can be. It's not something that I would say you want to do every single day. You could probably modify or optimize the model. Let's say you only look for these opportunities on Tuesdays and Wednesdays and Thursdays. People don't think about that. People don't think about, oh, maybe I should do it on just for London session or maybe just New York session, and start to slowly study this stuff. Now, to get to the New York session question, because this is probably the last thing I'm gonna talk about, and then I'm gonna just sleep for the rest of the weekend, man. Um, it's gonna be a good example. So Thursday is when the inflation rate came out and the news dropped. Now I want to see something. Now people are telling me, "Oh, Deontay, we have that time period in between here, that dead period, 5 to 7, and sometimes you're not giving that opportunity to get a trade set up, which is the life of a trader. But if you had to find a setup, you would have to utilize the opening price, Sunday's opening price, and use ideas of price being overbought and oversold to potentially formulate which way the market's going to go. If the market's going to trend higher in a higher time frame, normally aim for that. Don't aim for opposite or counter to the trend. If you're going to do counter to the trend, it can be risky. I see people do it all the time. The market's bullish, but they try to sell it and it burns their account. It just hurts them. They're like, why am I getting it wrong? Because you're going against the trend. The times that you're gonna find a couple days down, it's not gonna be as much as the all the other days up in the month. If it's gonna be an up trending month, you're gonna get way more green days than you are gonna get black days down. So the catch the counter is difficult. But going into the session, this is 7 a.m. here, and you can see how it raids this low here, this dead period low right here. And technically, it's 7 a.m. It would be 7 a.m.'s low. The price drops down. But when we check it on the lower time frame, let's see what we have. Going straight to the 1 minute because it's my favorite thing to look at, because the price action structure is very similar all the time. There it is. Look at that same thing I was showing all in Asian session here. And there we go. And you'll be looking to go long there. Fair value gap, that breaks a swing high here. And then it trades higher. And even going into the news, like I said, not all times would you get lucky, because the news would come in and then shoot down 15 pips or maybe even 20 pips sometimes, and then completely turn around and price rallies straight up. Price goes straight back up. But here in this example, you can see how this trade idea you're in before the news drops and it's still supported. Now, not to say this is something that often happens. It does happen once in a blue moon. Not a blue moon, but it happens once in a while. You'll see that. And even NFP sometimes, the same pattern would form right before NFP. And it's the one that supports NFP and price continues. Look at 830 right there. It comes right back down in that same fair value gap and then it runs higher. It's a risky scenario, especially trading on a news day that's red. It's just risky. But all in all, you can see how it drops below 7 a.m.'s opening price and then runs higher, runs straight up. And if you look at where midnight opening price is, that's close enough. Yeah, I ain't gonna measure it out to be too meticulous, but it's somewhere around here. That's midnight opening price. Look at where your entry is occurring. Below 7 a.m. and at a discount. Below midnight opening price as well. And also after sweeping what? Let's take a look. That London, that London low here. So a sessions low rated, and also that swing low rated. So it's almost like I'm still using that Asian session model idea. Any 15-minute swing low rated, I can still go down to the lower time frame and see if I get that entry technique that's going to form and when it's going to form the kill zone. 15-minute swing low broken. Let's go back to the 1 minute time frame, see where it's at. It's right here. That's that 15-minute swing low broken. After it's broken, it prints this. It prints that. And then it goes higher. Now you're just rolling dice here. I ain't guaranteeing you that, oh, it breaks a 15-minute swing low. Yo, I need to be looking to go long with that 1 minute fair value gap. This can fail. Do not be misled. I'm not trying to mislead you here. This can fail. Don't have high hopes or have high optimism about it going higher because it may not go higher, especially with this news event. I would say honestly, hey, you just got blessed with the graces of the gods of the market without getting stopped out with this idea here. Let's take a look at another New York session. Let's change the pair. Let's look at GU. It doesn't matter what we look at because it's all the same. Let's look at Thursday. See how price creates this 15-minute swing high inside the New York session? Do you see that, guys? See that right there? It raids a buy side inside its own session going into the news event, right? The news event drops and it runs up and it raids that 15-minute swing high. So you got traders probably chasing this. So this candle opened at 8:30 and it shot up probably, odds are. And everybody was like, oh, dang, GU's going long. And they went and brought it. It's going to 1 minute just to observe what happens. So it's quick. 8:30 comes out. Ooh, quick run up. Traders see this. Buy, 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 buy. Full margin. Price drops, dumps. They get margin call, blow the account. But then when we look at it after the news drops, right? This is 8:30's candle here. After the news finishes dropping, a large fair value gap is printed here. And it's rebalanced perfectly too. And then we have that. Swing low broken. Another swing low broken here. There's another one in there. I'm not going to mark it out, but you get the idea. However, there is conflict between Sunday's opening price here, this dash line, and then New York opening price, the dash line here. So here you would be selling in this idea, you'd be selling in a discount. And I said this before, you will be forced to do that at times. But it's better to try and catch the sell in the premium of the session. And this is quick. This is a quick raid. Now, if you're going to trade the news events, you can look for the clean highs, or you can look at the most recent swing highs on the 15-minute, the 5-minute, the 30-minute, and look to see if this high were to be rated, could this be a turtle soup? And you can see it is. It's a turtle soup. But that's trader IQ. That's something that will have to come with time and experience. You ain't gonna learn that overnight. I won't even learn that overnight. This is something I would not anticipate very often. But I could see how I could just place a sell stop here. I'm sorry, a sell limit here to sell on strength. Price hits me in, I'm selling with what? A 10 to 15 pip stop loss above this high here. And I will see if price will go lower. And I would hold, especially after this huge repricing going up and then coming down. And price refills it. And then you play it out, price continues to sell away. And look at how it sells into Sunday's opening price and then comes back up. So that's GU. Let's look at another day. Any other day. Let's pick a random day. Let's look at this. This is a Tuesday. All right, just look at this New York session. You can just tell, just distributes. This distributes, drops lower. Let's look into it. The open is here. Sorry. There we go. You can see that the dead zone here was trending. And normally, if you're going to be using the New York model, or you're going to be using the Asian session model or the London session model, you want this time period to be consolidating. You really do. You don't want this time period to be trending. If it's trending, odds are you ain't going to get that classic AMD that you're looking for, or Power 3 setup that you're looking for in the New York session. Because if you're looking at, for instance, side-by-side comparison, this dead zone here is very trendy to the downside. Look at this period here. You at least have a swing high and swing low available to you. You got a swing high here, you have a swing low here, but it's rated before 2 a.m. But look at how price raids that swing high going into London, and then it sells off. I know it's hindsight, but just look at it. Understand that. But notice how it's different in its dead zone. That dead zone in between is more sideways and accumulative versus that dead zone that was over here on the right. You go down to the 1 minute time frame, and you're gonna see probably the same fingerprints unfolding. And even within the London session, it raids here a swing high. See, our price comes up, it runs a swing high, it runs that swing high there. Fair value gap forms. There's a short, but I would be looking for the fair value gap. Let's see if we get one that runs. There we go. It's small, but it's there. It's the same entry technique. I haven't shown anything different since posting this stuff on YouTube. There you go. You would look to go short in there. And where's the short? Look at where the short is occurring again. After breaking a buy side liquidity pool and being above 2 a.m.'s opening price and being above midnight opening price, 12 a.m. down here, right there. It's all the way up here. It's a way better sell. It's a quality sell, if you have to ask me. It's a way better quality sell. And you would sell into that. Price knocks you in. There you go. Your stop loss would be whatever it is above the most recent swing high. 10 pips, 15 pips. Like I said, you know me. I don't change at all. My stop loss is going to be 15 pips no matter what, risking 1% on that trade. Roll the dice. And you can see how you have your London Judah swing. London Judah swing, and then it comes down. Now 3 a.m. Look at that pivotal point at 3 a.m. 3 a.m. For some reason, the market turns up really fast and it's gone straight up, just like that. And then it gets traders to go long. I want to see if it's above the Asian session high. It is. So price is still above the Asian session high. Ideal sells. You're still above the Asian session high in London. Odds are you may be able to catch the high day. And there you go. You may not get the exact high, but you may get close to the high there. So if we look at the New York sessions where the market has a very trendy dead period before it starts, you're not going to get that classic AMD that you're looking for. You're not. This is another example here. Look at how this market is trending between this time period, and look how New York doesn't give that break of this low, right? Of this swing low here. But if the session in itself has a 15-minute swing low, let's say you don't have a 15-minute swing low to use here, maybe go down to the 5-minute in here. Let's go back down here. Whether it's not the 15, let's go down to the 5-minute and see if it raises a swing low. Look at that. It runs a swing low here. What can you do? You could look to go long, right? Let's go on a 1 minute, see what happens after that 5-minute swing low is broken. Looking for a fair value gap that breaks a swing high. And there's one here. And that would be the entry. And it looks like price is not going to come back to enter it. And hey, those are things you got to live with. You ain't always going to get your entry point, but let's see if it does come back down into it at all. And 10 a.m. So you don't get that entry. You don't get it there. You don't get it there. But it's here. You're buying in a premium, so you would be forced to buy at a higher price than you would want. Not to say it's not bad every single time. It's just not ideal. If price were to come back into here, you might have had a setup. But here, you get no entry. Nothing. You don't get an entry. So it's okay. You don't even take the trade. But notice, like I said, right before the session starts, it's already trending. All markets start in the consolidation. Think about the Asian session model that I've been showing you guys. The New York lunch session is the consolidation. That 12 p.m. to 8 p.m. consolidation. If you're seeing that it's not consolidating here, odds are you're not going to get that New York session that you want. That simple pattern that I show, or that others show. Not to say it's just me, you ain't going to get it. But look at this one. Market consolidation. Look at the market consolidating inside this dead zone between Asian and London. It's consolidating. And I'm going to call this technically the Asian lunch because it happens after Asian. And I call this the London lunch because it happens after London. Look at how it's consolidating here. It's going to 15-minute time frame. All markets start in a consolidation. That's like ICT primer videos, you know? There you go. Right? And then you got that swing low inside here. So it's like we're doing the same Asian session model, but with London instead. Just a smaller dead zone to use. It's a shorter period of accumulation. And you can see it stalls traders up. Another period you should not be trading. You need to trade inside the highlighted areas. Price runs that high, buy side purge. Let's go down to the 1 minute. Notice where we are as to in factors. Above midnight opening price here. Get off the chart. Midnight opening price here. Above London opening price. See where the Asian session high is. We're above the Asian session high in London. Look at all the characteristics that show time and time again. These simple characteristics. Price breaks a 15-minute swing high. There's clean lows below. Clean highs just been rated. Let's see if we get that fingerprint. See what's going on here. Nope. Nope. Don't see it yet. It might be this one because this is a swing low. Let's see if the fair value gap forms on it. Nope, it completely reprices it, rebalances that well. You have to try again. It might be this one now. Nope, it's not. I'm just looking for my particular entry. And at times, my entry may not show up, but yours will, right? You may get that. You may get that breaker. You may get that mitigation. You may get that order block that you're looking for. Nope, nope, none. Yeah, so my entry technique didn't form here, but other entry techniques definitely formed here. The breaker definitely formed here. And yeah, price continues to decline. Look at how it takes out that equal low here. And then after taking out that low, what else is available for it? The Asian session low. There you go. Asian session high, Asian session low. And that's a day trade right there. You don't got to ask for a lot. 10 pips, 15 pips, 20 pips. Calm. Move on to the next day. Um, just to show another example. Look right here. Look at this. Look at this. Look at this. Look at this. Look at how it already night and day. It's so night and day. Look how different this New York session is forming with the consolidation before it even starts compared to the other days where the New York session like this. Look at that. Look at how New York session performs. Ugh, that's disgusting. Not to say you can't find a trade in here, but just looking at the overall structure of how it's forming, you like this. Everybody likes this move because it's easy to read and it's so simple. Open, high, low, close. Open, low, distribution. Got that high, come down, close. It's done. But how is this one more likely to set up? Because of the consolidation. Hopefully that answers your question to what you should be looking for or how to filter out a better New York session in general. 15-minute swing low broken, 15-minute swing low broken here, just like the Asian session. Nothing changes, guys. It's just a time period. It's a time period that changes. Go down to the 1 minute, see what entry techniques you got available to you. You got that balanced price range, right? Trap the sellers, fair value gap down, fair value gap up immediately, balanced price range. Most likely would have to go long back on here. So price coming down, up, coming into it, and then going back higher. That's the only other way I would have told somebody to go long, or I would have gone long, or I would wait for any. Honestly, if I would just go for any fair value gap at that point, because hey, you can't win it all, or you just stick to your entry. You stick to your entry model, and you don't break it for nobody. But we can see how price then it gets going, and where does it return back to? Let's go back to the 15-minute time frame. 15-minute swing high, 15-minute swing high. So what? Same thing, same analogy. Purge, revert. Nothing changes here. Not to say you're going to catch it every day, but this is just some identification of what is likely to probably occur during the New York session. You want the market. You literally want the market to do this. You want it to do that. Because when the market's doing this, you're like, holy damn, like what phase am I in? You just in expansion, reversal, retracement? What are we in? What are we in? We know that all markets start in consolidation. So once you start seeing that consolidation, you're at square one. You're at square one again. And then you build from there. You build from that idea. Look at that. Look at that tight consolidation here. Before London, it runs up and then it gives some leeway back down and then back up and it gives some leeway back down. Let's just observe that as well. Because the more examples, the better you're gonna have a feel for it. This is the highest high going into it. And that's ran right there before 2 a.m. Boom, it runs that high. It also runs the Asian session high as well. Give me 1 second. My little bro calling me. All right. Yeah, family first. You gotta always take care of them. You know. Shout out to little bro. Um. Yeah, 15 minute. No, it's not 15 minutes swing high broken, but this is the highest high that was broken within this time period. You can see going right into 2 a.m. It runs straight up really fast. Let's go down to the 1 minute time frame to see what happens. And we're above the Asian session high. So look at all the characteristics that keep forming around the Asian session. This is why I try to tell traders the Asian session is the key going into if the true day open. It gives some more, it gives projections or it gives levels or clean lows or clean highs for you to at least to formulate some trade idea. You're not always going to be right, but you want to at least paint a story to yourself towards the higher time frame bias. Huge run up. But there's news. What news was this? Retail sales. Who were to know what this data was going to do? I have no idea. I just play off of liquidity. Price runs all the way up, and then mm-mm-mm, fair value gap does not run that swing low. But we can see how price comes up here. Got a high point here, and you got a low point here. If you know ICT material, you know what this is. Boom, boom, boom. Trade into it. You would probably look to go short. And it just ranges after that news event. Just being held. And what can you do? What can you do? Every day is not going to be perfect. We could only arrive closer to the answer, but I try to tell people one trading model can change your trading career for good. You don't need to know all the answers. I don't know all the answers. I wish I can give everybody all the answers. I don't know them, but I don't need to know all the answers to be successful. If I overcomplicate the situation or overcomplicate complicate the speculation, I'm most likely going to get it wrong because I'm looking for too many things. I'm not determined or I'm not specific enough on what I'm looking for. If I'm not concise and abounding to my rules, I'm always going to be flustered. I'm always going to be going into bad habits. I need to stick to a simple entry technique. I need to stick to simple rules of when I should be selling, when I should be buying, when the market should be bullish, when the market should be bearish, when I should be expecting reversals, when I should be expecting consolidations. And once I lay all those rules out, I should have the foundation to potentially be more successful as much as possible. And then ultimate goal is to be profitable. So hopefully this was insightful. It was a long one tonight. And I really do apologize for keeping my sh- uh, sh- chart not shared and just talking. I can't believe I was talking for 20 minutes, almost 20 minutes, nearly 20 minutes, not sharing my chart. Like I would have been pissed if I was one of you guys, bro. Like, what are you doing, Deontay? Um, but yeah, I'm gonna check the chat. I don't know if you're still here. Appreciate you. It is a long one, man. It's always been a pleasure. Chat, dang. Probably people yelling at me like, "Yo, D, you're an idiot." I think that's SMT. ETH versus Bitcoin. Ooh, yeah, I definitely forgot to share my screen. I'm so sorry, guys. I apologize. Like I said, once again. Yeah, this was a long one, but a lot of information. I know sometimes I definitely got to get more organized in the way I kind of go about certain things because my brain, when I start talking about this stuff, my brain just goes 1,000 per minute. Like, because I be seeing a lot of things, I be seeing a lot of ideas. I'm just like, this is simple. This is simple. Look at this. Do you see that? Are you comprehending what I'm saying here? Step one, step two, step three. And then I'm like, yo, you can see this on any asset pair. You can see it on any pair, but that's just me naturally. View 7 messages. No, no. Yeah. I apologize, guys. All right. If anybody has any questions before we go, I'm gonna I'm gonna answer it, and then after that, I'm gonna go to bed, and we're gonna get back to charts Monday. Mm-mm-mm-mm-mm-mm. I'll give it like 5 minutes. and then it's gonna take a while to process and upload on YouTube. Dang, it's 11:09 p.m., bro. All right, I think we're good, right? I think we're good. You just got in? Dang, fam. I'm sorry, man. I pretty much like said a lot for the last like 3 hours. I recorded it though. I recorded those. It's gonna be on YouTube. No problem. Yo, I'm sorry. Like I said, I'm very sorry for like what I did earlier. Once again, did not mean to be talking and not sharing my screen. Thanks. I just want the best for you guys. Do not fall for the scams. Do not buy no courses out there. Stay off of Twitter. Stay off of Instagram, and be careful with who you um indulge in with your forex journey and education. Peace.